Hello, everyone. Good morning, and thank you for joining us on a Sunday morning. I am Richa, and I will be your host for the day. A very, very, very warm welcome to each and every one of you. Again, thank you for joining us for Thrive 2022, making investing accessible in India. Now, before we get started, grab a comfortable seat and your bottle of water, and maybe if you need some snacks, get that as well. And join us for an amazing journey where we bring to you some of the most renowned personalities who are the drivers behind the markets we invest in today. I would love for you, all of you, to show some excitement in the comment section, like the video, and subscribe to Grow's YouTube channel. Share this link with your family, your friends, get them all over here. And also, before we get started, I would like to take a moment to thank all our COVID warriors. We know we're in the midst of a pandemic again, and a lot of us are at home, maybe recovering from COVID, and most of us are safe because of our COVID warriors. So, we would like to tell you that your work is not going unnoticed. So, thank you for everything that you do. And if any of you are stepping outside for whatever reason, please make sure that you wear your mask, you stay safe. And yes, thank you so much. So now let's get back to today's event. Okay, now before we get started, let me know in the comment section below how many of you have attended the previous sessions of Thrive and how many of you are first timers. I would love to see a breakup of how many of you have come. This is your first time. How many of you have been there before? Okay, a very, very good morning to everyone. I can see a lot of people saying good morning. Good morning. Okay, now, irrespective of whether you've been here before or not, let me also know what session are you most excited? What do you want to learn at the end of the entire experience of Thrive this time? Let me know that also in the comment section. I'm sure a lot of us have different motives, different intentions. Some of us want to maybe get more insights on finance, maybe learn more about financial literacy, etc. Just let me know in the comment section. I'm looking forward to your comments, and we can probably display some of the comments on the screen as well. Now, now that we're done with that, first of all, our motivation behind bringing Thrive back is number one, public demand. If the Janta says something and we don't do it, it's not done. And number two, to bridge the gap when it comes to financial literacy in India. We all know that owing to the pandemic and pre-pandemic, there were a couple of retail investors investing in the market, and we almost saw a 2x number of demat accounts opening post-pandemic. And we know that the number of retail investors entering the market have exponentially increased. So it is only fair to bring such a session so that all of you understand from industry experts as to what is happening in the market, how you can become more aware about whatever it goes on in the back end of the market, because that's the kind of speakers we have here today for you. So once again, a very, very warm welcome to each and every one of you to third edition of Thrive. I'm sorry, making investing accessible in India. And it's moments like these that I miss the applause of the audience, but we will make do with what we have. So spam the comment section, show us your excitement. And before getting started, please, please, please get Thrive trending with hashtag Let's Thrive on all social media platforms, Twitter, Instagram, LinkedIn. Just, I trust you guys to make this trending. So go ahead, tweet with hashtag Let's Thrive, tag Grow, tag me, tag the speakers, tag everybody, and let's get this event trending. For all of you who just joined, I am Richa. I will be your host for the day. I hope all of you have grabbed a comfortable corner, some snacks, because trust me when I say you are in for a hell of a ride. Grab your family, friends, roommates, neighbors, and whoever you think needs to learn a thing or two about financial literacy. Now, without wasting any more time, let's get started with the third edition of Thrive 2022, Making Investing Accessible in India, an initiative by Grow to help the young population and the population of India achieve financial literacy and bridge the gap when it comes to financial inclusion. So, let me introduce to you our first speaker for the day. This speaker honestly needs no introduction to the Grow family. He has been an integral part of Grow since day zero. Along with three other dynamic men, he has driven Grow to be the platform it is today. He is an engineer by profession and an entrepreneur by heart. He is an microelectronics engineer from IIT Bombay with more than 10 years of experience in building brands as founder, engineer, and a product manager. With successful stints at Itium, Eduflix, and Flipkart, he co founded and now is the CEO of Groww. Any guesses? I'm sure you know who he is. I'm not going to waste any more time with your guesses, but he is none other than Mr. Lalit Keshre. A very, very warm welcome to you, Mr. Lalit. He is going to set the tone right for today's event with his opening remarks and officially declare Thrive 2022 open. Over to you, Mr. Lalit.
Thank you so much. Hey, hello everyone, and welcome to the third edition of Thrive. This time, our theme is making investing accessible in India. देश के कोने कोने में हम investing कैसे ले जा सकते हैं? Those are the ideas we are going to discuss today. If you look at last 20 years, India has grown significantly. अगर आप सिर्फ सेंसेक्स को ही देखेंगे, तो it was almost 20 years back when I started tracking it. It used to be like 4,000, or aaj you are seeing that today, right? So India is growing, markets are growing, but one sad truth is that most of the wealth was not generated by retail investors, people like us. Most of the money was made by institutions, be it domestic or foreign institutions, or maybe some HNIs and some retail investors. Either retail investors did not participate in the markets, invest ही नहीं कर रहे हैं, या फिर उन्होंने losses काफी accrue किए हैं, right? Next 20 years we don't want to do this. Next 20 years should be different, and that's what Groww is on a mission, right? To make investing accessible in India, right? For people in India, people like us. So a lot of prominent speakers are speaking today, as I just said. These are the people who know about how everything works, how markets works, right? From regulators to industry to journalists, and you're going to learn a lot from them. But before kind of starting, I also want to share my 5 lessons that I have learned, right? 20 years back, around 20 years back, when I was in IIT, one of my friends got a job at a company. Let's call it G. I don't want to reveal the name. And I was amazed to know that this company is actually, there's something called stock market and it is listed there. And you can buy shares and you can own a part of it. You can become an owner. So I opened my account and bought few shares just for 80 bucks, 80 rupees, just 80 rupees. And I started my investing journey and I learned. So my first insight is that it's always better to start early, right? Secondly, when you invest, you start asking questions like, यार what ये कंपनी करती क्या है, how will this company grow, इस कंपनी का मैनेजमेंट कैसा है, इसका कॉम्पिटिटिव एडवांटेज क्या है, ये 10 साल में कितनी बड़ी हो सकती है. You learn about business, right? And that's how I learned about business. So investing, you do investing to learn and you learn to invest. So it's like a positive feedback loop: learn, invest, and so on, right? So that's my second insight: always be learning. Then few years I passed on, I kept investing. I tried a lot of complicated things: intraday, FNO, moment, like you name it, and I've tried like a lot of things, right? And then in 2013-14, I was very busy with my job, and then one of my friends gave me a tip: yeah, this is a micro cap software company, this is going to grow big. I did not have time to do any research, I just invested some money. But the bigger mistake that I did was that मैंने ये बता दिया अपने फादर इन लॉ को कि मैं ये कर रहा हूँ, and he is like, he has blind faith in me, like जो भी I do, he will just do it. So he invested a lot more money, and that company kind of kept growing. Stock price बढ़ते रहा, and थोड़े महीने बाद पता चला कि कुछ fraud था, and the stock tanked. We lost money. So my learning, third one, is don't avoid tips. Giving tips, taking tips from close friends, close family, no. DYOR, do your own research. If you can't do research, hire an advisor. If you can't hire an advisor, invest in mutual funds, SIP. If you don't know what mutual funds to invest in, passive investing कीजिए, index SIP, and so on, right? So there are many options, but just avoid tips. And then After another year or so, me and my co-founders, we started thinking about building something, building Groww, right? And we did a lot of market research. And one interesting, very interesting insight came out, right? Most of the people that we talked to, most of the people who made money in the market were actually doing SIPs. And I used to think, yeah, SIP बहुत boring लोगों के लिए है. Like, I understand market, I should, play and do this and that and so on. But money was made by people who are doing SIPs for 5 years, 10 years, and so on. And just imagine, after 15 years, I started like 20 years back, and for 15 years, like then I realized this. And then I did SIP along with starting Grow. So my fourth insight is that don't underestimate SIP. And lastly, right, no matter how many years of experience you get, no matter how many YouTube videos you watch, no matter how many books you read, market is going to teach you lesson, right? You are going to make mistakes are going to happen. You need to make sure that these mistakes don't kill you. You should survive, and not just survive, you should thrive. So that's the fifth and the most important one. So I'll just summarize. Number one, start early. Number two, always be learning. Learn to invest, invest to learn. Number three, stay away from tips. Number four, SIP. And number five, be prepared for mistakes. That's all, folks. Thank you so much. And I'm sure you would have a wonderful time today. Thank you so much. Yeah. Bye.
Thank you, Lalit, for such insightful words. And I'm sure this was the right tone. We have set the tone right for this event. So thank you so much. And let's start off with today's event, guys. So, what a perfect note to kickstart the sessions for the day. Let me know in the comment section how you guys are feeling. And again, we have some very, very renowned personalities today who are the drivers behind the markets that we invest in. So, if you need to grab a snack, invite some friends, find a comfortable corner, now is exactly the time to do that. So, go ahead and do that. And let me know in the comment section below how many of you apply the tips that Lalit has told you. One is start early. How many of you started early, or how many of you are maybe in your 20s and want to start? Let me know in the comments. And that brings up me to the second tip, which he said, that learn to invest and invest to learn. Now, and sometimes trial and error is okay. You can just get into the market and start investing. So just go ahead and learn a thing or two, do your own research. I think Lalit emphasized on that, doing your own research. So do your own research, figure out where you want to invest. Wherever you want to, start early and learn to invest and invest to learn. And don't take tips, do your own research and start SIPs. It's okay. So, yeah, as Lalit said, a lot of people think it's boring. I want to make big money, I want to make quick money. But in the longer run, see what your goals are and accordingly start SIPs. And it's okay to make mistakes, not just in the stock market or while investing, but in general, it's okay to make mistakes. I know this is getting a little philosophical, but it is okay to make mistakes. So, yeah, these were some great tips from Lalit. And he has obviously set up a very, very big brand, Grow, for all of us, where we invest. So, we can definitely go ahead, follow these tips. And now we shouldn't waste any more time, and let's just get started with today's event. So, let me introduce to you our first speaker. So, our first speaker did his BTech in mechanical engineering from IIT Bombay and went on to complete his PGDM from IIM Kolkata. He is a distinguished visiting professor at Ryerson University, Toronto, Canada, too. He is one of the founders of India's National Stock Exchange, better known as NSC, where he worked from 1992 to 2000. He is best known as the father of modern financial derivatives in India due to his work at NSC. From 2000 to 2009, he worked as the president and chief information officer of Reliance Group and was also the CEO of the cricket team Mumbai Indians in its formative years. Let me know in the comment section how many of you are Mumbai Indians fans. Here we have the CEO in its formative years of Mumbai Indians with us. He also handled additional responsibilities as the head of corporate communications for Reliance Group from 2005 to 2006. He joined BSC as deputy CEO in 2009 and was appointed as CEO in 2012. He is credited with reviving BSC, including making it the fastest exchange in the world with the response time of less than 6 microseconds. He is also instrumental in setting up India's first international exchange, India International Exchange, which was inaugurated by the Honorable Prime Minister of our country, Shri Narendra Modi ji, in January of 2017 at Gandhinagar Gift City. He has successfully completed the IPO of BSC, which was pending for over 10 years. BSC IPO was oversubscribed 51 times with close to 12 lakh applications in January of 2017. He is associated with several NGOs and educational institutions. His writings and quotes have been published in various newspapers, magazines, journals in India and abroad. Wow, these are some fantabulous credentials. So, any guesses? He is none other than Mr. Ashish Kumar Chauhan, MD and CEO of BSC. And joining him in conversation is Grow's very own co founder and COO, Harsh Jain. Please join me as I welcome Mr. Ashish and Mr. Harsh for this session titled How Can Exchange and Market Intermediaries Collaborate to Bring More Investment Products? So, over to you, Mr. Harsh. I believe our guests are yet to join in. So, till then, let's try and engage in the comment section. Let's see. Let's show me some excitement, guys. I'm really, really looking forward to your comments, and we will also try and put up some of the exciting comments that you have. So, let me know what is something you are most looking forward to after this session, through this session, and also
Can you
let me
see?
know if this is your first time attending Thrive. So please keep the comments coming in. Keep liking the video, subscribe, share it with your friends. We are yet to start with our first session. So please show some excitement. And I can see a lot of like the video, share the video. I can see a lot of good morning. And we have a lot of comments coming in. Okay, I see a great yes, share market research increase. Yes. Hello, Mr. Ashish.
Hi, Richa.
How are you doing, sir? On a
Yeah,
Sunday
doing
morning.
well,
Thank
thank
you for
you.
joining us on a Sunday.
Oh, thank you.
So, anything before we get started for our audience? They're very looking forward to this session. So, you know, a word or two before
No,
we get started. Mr. Harsh will be joining us soon.
yeah, not an issue. Whatever comes my way is fine.
Sure, sure.
So,
Well, so
how
that's
cold? Yeah, how cold is it in Bangalore?
Bangalore is honestly sunny these days. It's sunny during the day. It's not very cold. So it's pleasant. Bangalore has pleasant weather. It's known for its pleasant weather. It's sunny during the day. It's not very cold. So it's pleasant. So have Mr. Harsh.
Hi
Thank
Ashish,
you so much.
morning.
Hi, Harsh. Good morning. Good to see you.
Ashish, yeah, absolute pleasure to have you on Thrive. Thank you so much for
Thank you.
coming.
Thank you.
Okay, over to you, Harsh.
Thanks, Rita. Thank you so much. Ashish, I don't know
So,
where to start. आपके लिए like there's so many things that everyone's team and I also personally know that difficult to start. But see, the curious question I'll start with. So Ashish, when you started your career, capital markets and the entire infrastructure in India was at a very different state. If I read about it and I talk about it, I don't think आज की generation will even be able to understand or imagine कि कभी ऐसा भी होता था. But you played a significant role in bringing it to what it is today. So can you just talk about your journey in the industry?
in a way, I mean, I joined the job. My first job was in 91. I joined IDBI from campus. IDBI used to be larger than SBI, if my memory is correct. It used to be a large development finance bank. Means it used to give loans, long loans, not the working capital types. And so I wanted to work on India's development and things like that. And so I joined there. And of course, they had to take me. But effectively, the computerization was not there. And stock markets were basically, in a way, clubs of brokers. There were investors and people had made a lot of money in 70s and 80s because of the Reliance and FERA companies those days and all. But it was still a very archaic kind of activity. Not many people were aware, interested, and so on and so forth. And then we had this 91 is when we had a balance of payment crisis. And India suddenly had to open up itself. India was not willing to open up, like we are not willing to change anything. Nobody is. And that's where the market started taking over. Because we were largely planned economy where banks were supposed to play a major role. Capital was to be channelized, and all those economics which we are taught even now was taught to us even more seriously those days. And so banks were the mainstay, and stock markets were what I call Satta Bazar. If you have seen from Saigal days, there used to be a movie hero called KL Saigal. I don't know how many of you might have heard of him. Just search for him. Even 1940s, Satta Bazar was a Satta Bazar, okay? And today also, Dalal is a bad word. It's a four-letter word. If you tell somebody you are Dalal, it means bad. But they used to enjoy their life, although being called bad things, because they used to have a situation where they had a monopoly in each city. And so Harshad Mehta thing happened under a context of forced liberalization. IMF started pushing us. World Bank started pushing us. And we had reluctantly tried to open up. Of course, now we can look back and say somebody did a great thing, which in some ways, yes, but largely it was forced. And markets started going up in 91, 92. I recall in one day, when I joined the IDBI, rupee was 17 rupees per dollar. In one single day, it became 24 rupees per dollar. And I think 1 week later, it became 29 rupees per dollar. So suddenly, we had a huge devaluation. And everything was going haywire, huge inflation, this, that, and the license Raj, you might have only heard of it, but we experienced it. And so Harshad Mehta, in a way, came out of that context that inflation was happening. The world was going through its own pace because the socialism was breaking, Russia was breaking apart at the same time exactly. And it was a what I call wean of capitalism over socialism. And that's where everything was looking hunky-dory. We were not allowing foreigners to invest in India even those days in 91. And slowly things started opening up. Markets went up, and people thought markets were going up because all this liberalization happened. And after a year in 92, it was realized that markets were going up because some brokers were collecting money from RBI, banks in a nefarious way and putting into stock markets. That's why stock markets were going up, not because they were going up due to some fundamental reasons. And that created a tension in government, in various authorities saying, we wanted this market to go up and we wanted to show our victory, and somehow it went bad. And that's why these brokers are bad. Banks are not bad, although things happen bad there. But banks are our controlled, so they are not bad. We will handle them. But this brokers thing need to be resolved. And that's how they say that we need to automate. If India has to become more capitalistic from socialistic, it needs to have a better capital markets, not controlled by this dhoti topi wala stockbrokers and all. And that's where basically the concept of automation came in, saying we need to have a stock exchange which is not owned, operated by stockbrokers across the world. From the first exchange in 1607, the stock exchange were owned, operated by the stockbrokers only. While as in this case, government of India wanted to have a exchange which was not connected to stockbrokers, not owned by stockbrokers. It had to be connecting because brokers were the intermediaries. And that's how a concept of a screen-based automated exchange happened. and that's where I was in IDBI, and IDBI was told to set up a team to set up this new exchange, which would first trade debt bonds, because bond market is where all these problems happen in Harshad Mehta scam. Some of you might have seen that Sony TV serial also. It is not as glamorous as it is made out to be, but it is interesting in a way. And so I was the 5-member, and I was a part of the 5-member team which was selected. Why I was selected is also interesting, because I was only 1.5 years into the job. Only thing is, they selected 5 most bright people of young people of IDBI those days, and one of them, who was brighter amongst them, actually dropped out. That's how the story goes, saying that this government exchange will not work, and this automation is all bogus. And so he dropped out, and then they had to find a guy who is pliable, who doesn't know the ways of the world, who cannot say no, and that's how they selected me. That's how kind of I came into the stock markets. Otherwise, I was a banker doing long-term banking. Of course, I also used to trade in stock markets because I used to have some salary. And when the Harshad Mehta scandal broke, I lost almost 20-30 times more than my salary. So if my monthly salary was 3,000 bucks, I kind of lost almost 60-70,000 rupees. Those days, it was a large number. And so I learned the stock markets by making huge mistakes, and I wish nobody does that. But in some ways, I had learned the tricks of trade from my studies, but more importantly in real life at the BSc, because it used to be closer to my office. We used to go there, we used to trade, we used to think we are finance people, so we know finance, but somewhere markets have different ways to teach you. And so I came into this 5-member team, and I was the only engineer in the team, and I was the youngest. So being youngest, although from IIT and I had to bring the tea, coffee for people, and then I had to also do what they didn't want to do, like interior decoration or getting agreements and stuff like that. But I also had to do IT because none of them were engineers, and that's how I ended up doing most of the IT for the NSC, most of the building construction, most of the equities. Why? Because equities was a Gujarati thing those days in Bombay Stock Exchange. Even in most other exchanges, non-Gujarati exchanges also, the notices used to be in Gujarati. And I have studied in Gujarati medium. I studied till 12th in Gujarati medium. And of course, those guys were traditional guys, dhoti topi guys, as we used to call them. And dealing with them was not easy for my other colleagues, senior colleagues. So they said, okay, you do equities, we'll do bonds. Bonds is like a 5-star thing, right? You do meetings in 5-star. While as when you do equities, you do it on roadside, right? And so I had to do everything which was not sort of not liked by others, or not, they couldn't do it. That's how I did IT and equities. And in a way, the entire modernization, automation of stock market actually happened by what I call first principles. I had to set up a satellite telecom network, because those days one telephone line, if you applied, it would cost, it would take you 5 years to come to your home. And we wanted to do automation across the country. One 64 kilobits per second lease line would cost you 4 lakh in Mumbai. But if you have to connect to Calcutta, it used to be like 30 lakhs. And 4 lakhs of today is like 40,000 of those days, right? And so it used to be huge cost, very little reliability. And so we thought we'll put the satellite, we'll put a satellite communication. India had set up a lot of satellites, but we never used them because America sent it, we also sent it without understanding how to use. And so when we said to government, we'll use it, they said, you can use it. But then the DOT and everyone said, okay, we will allow you a bandwidth which nobody else is using in the world. So you can't take the ready-made hardware and software. So we had to get things developed in Israel. We had to get things developed in US, got it here. And so effectively, nobody had seen the satellite telecom, how it works in commercial world. I was the first guy who had to actually do it on first principle basis. I mean, nobody had taught me. I am a mechanical engineer, right? But I had done a little bit of programming. And that's how, in a way, I became what I call a nuts and bolts guy of the stock markets, probably a unique guy in the world, because we are the largest experiment of automation in the world. Before us, people used to think America has automation. NASDAQ used to be screen-based, but it was not. NASDAQ used to have basically people putting quotes And if you have to trade, you have to call them up. London tried automation of stock markets. They put up a few billion pounds in 97, I mean, in 89 to 91, and they failed, and they actually dropped. If you want to learn about it, write Project Taurus for London Stock Exchange, you will realize India was the first situation which was not owned and operated by brokers, set up separately, and that's how the automation had no opposition, and by the time the computers had become reasonably reliable to actually continue functioning throughout the day, and the SETCOM was a masterstroke in the first year where the telecom things were really bad, and that's how all these things happened. But in effect, when I look back, the stock market those days was very different. In 92, 93, and 94. Suddenly a new thing happened, but it was not destined for a success. Automation is always opposed by people who are vested into the past, non-automation. When we launched NSE's equities on November 3, 94, we had like 700 trades, 700 and something. And later on, they became like 200 trades in 5-6 hours a day. And we almost thought this is going to go down because nobody wanted it. By the time Harshad Mehta scandal had become memory of the past. And then BSE made another mistake of suspending Reliance Industries stock and all the other group, I think, for 4 days for some duplicate shares or something. And then the Reliance shares got listed on BSE. They were on the NSE. They were the first group that got listed on NSE, and all that trade started happening on NSE. And within 6 months of that, I think first 5 months I was watching screen every day, 200 trades in 6 hours. Like one happens, then after a few minutes one more happens, and stuff like that. And within 5th to 11th month, it became larger than larger than BSE and any other stock exchange in India. So it happened in a way. Automation was done well. It took some months to stabilize, and then this Reliance thing, Reliance fight with BSE happened, and that's how NSE became successful. So there are many reasons why the automation became successful. But today, what you see would not have happened, and India became pretty much the torch bearer of stock market automation across the world. After that, New York, Chicago, UK, Europe, all of them became automated because NSE became successful. And credit to BSE, within 6-7 months of NSE going live, they went live, which was a surprise because they already had a software ready. They were not going live because the brokers were opposing it. So it forced them to also automate themselves.
Yeah. So Ashish, this is very exciting, like the entire journey and even the development. So from a technology point of view, I think I would say India is far ahead. But from a penetration point of view, there's a lot of path to be covered, I guess, for India. So what do you think are the areas where we further need innovation, or how can we, as a platform, as a market intermediaries, play a role to improve the retail participation and excitement in the industry?
So in a way, I would say that it's a function. When I look back philosophically, we were successful in few. At the same time, we remain a poor country, right? We are a developing country with a per capita income of $2,000 per year. America has $64,000 per year, 66,000. So it's like 33 times larger. But all humans broadly eat similar amounts, right? Probably few 100 grams less or more. And so most of our people required, or even now, most of their money which they earn, it goes in sustenance, in day-to-day life. They don't have basically money to save. And if you don't have money to save, how will you invest in stock markets, right? So we are at a development stage where we are far ahead of rest of the world in automation of our markets. Not only automation of our markets, but automation of the entire financial system now with all the UPI and everything, mobile to mobile payment. Nobody in the world actually has that kind of automated systems. I can vouch for that. I do speak at UN and many other forums, and they actually cannot believe that India has automation of this type. No, I mean, you take it for granted because you are young. It in a way you take it as your right. But when we were born or we started working, it was not our right. So effectively, India doesn't have that per capita income to make large number of people invest. The second part is the cost of reaching out was very high, say 5-7 years back. You have to open branches, you have to do this, you have to do that. And so every time you have to open up a branch, it will cost you a lot of money. And that used to happen to banks also, but more to the brokers because they did not have capital. And that's where basically the automation through mobile has helped a lot. And third thing is our regulations like physical KYC and all also had stalled a lot of people from coming in the market. And so that, again, I think it has been automated reasonably. Our regulations have changed. And so all put together, last 2 years, we have added we used to have 4.5 crore or 4 crore investors in 2019, towards 2019 end. And now early 2022, we are 9.5 crore. So what took us 147 years as BSE or 145 years to get that 4.5 crore accounts, more than that we have added in last 2 years alone, largely, and that also in a time when you can't even move. It's because of this automation which you guys have been able to pull through and the regulations that have changed. So for me, in ways, today if you look at the number of people investing in stock markets in India, it is individuals or what I call individual PANs, that they are close to 4.5-5 crore, although we have 9.5 crore accounts. NSE has similar numbers, mutual funds have similar numbers. Put together, I think it's not more than 4.5-5 crore unique PAN numbers. But 5 crore people is still 50 million. And it's each person supporting 5 people in his family or her family. It's almost 250 million people we have touched directly. And if you say indirectly through EPFO and others, we are talking about insurance and all. We are talking about probably double that amount. So we are talking about people touched directly or indirectly is around 50 crore and directly alone is 25 crore. That doesn't mean we have to stop here. Every individual who is adult can actually invest in stock markets. So effectively, eventually when our population stabilizes to 150 crore, I presume we should have around 75 crore people investing in markets, provided our job, I mean, our per capita GDP goes to some $15,000-$20,000 a year, right? And so it's a function. See, what happens is we look at America and see them and then worship them. It's basically they're rich. We are smart, but we have not yet become rich. When we become rich, they will come here and study. Today, you worry about Robin Hood, but you don't have a story about Groww. For me, Groww is a much more exciting story than Robin Hood, right? But still, even you guys who are promoters of Groww also will be excited by Robin Hood story because they are a moneyed, basically, society. We are a poor society. So that's where I think the excitement is more there by looking at their numbers and all. But in terms of the work you guys do or anyone else does in the same field, I mean, for me, Zerodha or Upstocks, or there are 10, 15, 20 of the large ones, ICICI Direct or any one of them. I think the work you guys do is phenomenal. At the cost you do is unbelievable. And that is true with us also. The automation we provide, there is no comparison of cost. I mean, across the world. I mean, I would be providing the same automation at 100 the cost and 100 times the speed. Today, you won't believe, BSE gets around 80 crore orders in 6-hour day. I have a capacity to take 5 lakh orders in 1 second with a response time of 6 microseconds. But usually I'll give you response in 2 microseconds. And although NSE is today larger and I had to shift my job and I became entrepreneur in between, then started doing private sector, then came to BSE. But today BSE gets more orders per day than NSE does. Because the technology which I do is really low cost, it's open source. I own my technology, this BSE does. In fact, BSE bought my technology company. That's how I came to BSE. But effectively, we are basically today the fastest in the world. but the number of orders you can pump into BSE is unbelievable. Even NSE, NSE doesn't have with probably 10 times more volumes or 20 times more volumes than equities alone. Their number of orders are much smaller, because if they start getting more orders, system will stop behaving, right? We have seen that in 24th February and stuff like that.
No, Ashish, definitely, I think technology is there, but is there a scope of new products coming in where, as a retail investor, some people obviously invest in stocks, some in mutual funds. Um are there more products that you see should be coming, looking around, and where are the more opportunities for people to diversify their money in?
Now, of course, the new products will keep on coming. For 140, almost 120, 130 years, equities was the only game in town. Bond market, we have been debating for last 75 years of independence. But bonds are slowly becoming more active. Derivatives did not exist in India. There was a product called Badla, which is supposed to have mimicked derivatives. But when I started talking about derivatives in 95, it was supposed to be weapons of mass destruction by none other than Warren Buffett, right? It still is in a way, because if you don't know how to use it well, you can at least kill yourself, if not others. And so there are especially public products which you guys work on, what I call the large number of people have to do it. It has to be simple products. It cannot be very complex. It has to be less risky, because again, if you have very high risk, then whenever the money is made, the investor thinks it's his smartness or her smartness. But when money is lost, they will come to the SEBI and wanting their money back. And so India is not a laissez-faire market. There is a lot of attitude of going back to government, shame them, get their money back and all. As and when people become mature and stable, saying, okay, I am taking my decision, I am responsible for losses as well as profit. That is the day you will get what I call complex mass products like derivatives. Although derivatives become very popular in India, in a way, when I'm what I call even Nifty was created by me. But effectively, we need to be very careful in creating products which are difficult to comprehend, highly risky and all. But we have come out with like SME products, which is working very well. Now we have a startup product. And the other thing India needs to worry about is, does it need to do over trading or trade for the sake of trade, or does it need to basically go for investments? At this stage in development, should it focus like today? If you look at the derivatives, we trade 1 crore rupees in a day, most days. 1 crore rupees. Okay, that is India's GDP traded in once in 2 days. Now, do you require that? Probably no, right? But somebody will say, what is your problem? If we trade more, what is your problem? Which is okay. So for me, those are the issues. There are things which are public policy stuff. There are things which help some of the trading members. And then there are issues which actually affect the general masses. And that's what we need to continue to balance in terms of creating new products, allowing new products, and doing basically what we call progress, in my opinion, is a very fast changing situation. So products will continue to come. Some of them will be difficult to comprehend. Some of them will be retail even after all these discourses. And we need to actually large entities like stock exchanges or large brokers. We have to worry about the risk aspect of it, especially on edges when that risk does not manifest for years altogether, and suddenly the markets fall in 1 second, and then everyone goes bankrupt, right? So all those things also have to be done, because what is required is orderly markets, not disorderly markets. Disorderly markets may allow more trading, but orderly markets is what gets more investors into the market, because people do not like too much of movements. And then there are some people who like it, who want everyone else to come into that, and so on and so forth.
I think very much case in a point. There's a lot of noise around the crypto happening outside, Ashish, and feel free to comment and share your thoughts. But when there's so much talks happening around, everyone is very curious to know what's happening and what should happen. Like from the thought leaders, how are they thinking, and what should be the right thing for आम आदमी, like एक आम investor के लिए, when they see around these things, how should they be thinking about it?
I recall around early 2000, my one of my cousins staying in a village, he sent me a note from, I think, Zimbabwe or some such country, which had like $100 million written on it, both sides, like a physical note which was looking correct. And he said that some uh, some monk who was passing by his shop had given him, and now he has become $100 million worth person. And he had sent me that note saying, "You get this whatever amount, even $100,000 is fine. Please get me that money so that I can live life happily." And so I tried to ask my friends in the forex market saying, "What is this?" And they said this is worth 0.00001 US dollars. Although it is worth 100 million in Zimbabwe, it is written that the value is basically close to zero. So don't waste your time. So I told that my cousin, and he was kind of very downtrodden after that. And that basically searching for what I call um, fast money and a very large amount of money using many such things are what I call uh, uh, exercise in futility. And you can create literally millions of different series of bitcoins, and I can call it Bitcoin, Bitcoin, Bitcoin One, Ash Coin, Ashish Coin, whatever. And nobody can stop me. And similarly, nobody can stop you. And if I am good enough and all of you follow me, then I'm basically the issuer of a new currency. And that used to happen in 1850s, 1860s. A lot of banks used to issue their own currency, which is called promissory note. If you read Indian note today, it says, "मैं धारक को 100 रुपया अदा करने का वचन देता हूँ." That is basically a promissory note, right? And it used to be issued by banks, not by central governments or central banks. And so, and those banks end up issuing more notes, and they went out. And people tell me that in Bitcoin you cannot issue more Bitcoins. You will be surprised. Only time will tell you. And many people tell me that it's so great a technology that it cannot be hacked. I have worked on technology all my life. I mean, the only thing I have done is finance and technology. And in IIT Bombay, where Harsh also comes from, in early 90s, we used to run a wallet, which was what I call prepaid wallet. You didn't have to do things. And it used to have the best encryption those days. And so the sabjiwalas and the barbers and all used to be given. And I had just passed out, but they were basically, the students were given some money, and they used to think it is not breakable. But after some time, some students actually hacked in, added 500 more rupees, and kept on getting services for free or goods for free. And so all these things do happen. There was a company called RSA tokens. If you have not heard of it because you were born before that, check it out. RSA tokens. It used to be the ultimate company on information security. One day it got hacked. They used to have a token. You used to get a keychain which used to have number changing randomly every 5 minutes, and the server used to change the same number if you had the same token, and you could use it as your password. It lasted for a few, but almost a decade. And as soon as it got broken, the company collapsed in one day. Everyone who were using, all banks and all of us, had to stop doing it, because then that money is gone, right? So be aware. At the same time, the current currency framework itself is depleting itself very fast. The way the governments are, in a way, using too much of currency. And so you think you have a hedge against that in going into cryptos, but you will have like million cryptos, right? Or a billion cryptos in probably 10 years, and trillion cryptos in one day after that, because after billion to trillion, it becomes very easy. If you see the curve that happens, the billion to trillion is very easy. It's the first million, which I think we have reached million today in terms of number of different Bitcoin, I mean, different cryptos and different what they call one-time tokens and all. And so I think million to billion might still take probably few months, and then trillion might happen fast. And after that, it's like my monopoly money vis-a-vis your monopoly money. All of us know the monopoly game at home, right? I take out my money, you take out your money, and as far as we all agree, it's fine. But when it goes out to the buying with the shopkeeper, will he take our monopoly? If he takes it, very good. He has to be Elon Musk, right? But otherwise, be aware, be careful, and if you want to still trade, because it's like a trade mill, or a musical chair that you think, yeah, well, that guy is getting from $1 to $60,000. I will freedom, what I call fear of missing out. So you want to get in, but you have to be sure that you have to get out before the game stops, right? The music stops. So be aware and do whatever. I'm not telling you you shouldn't learn your own lessons by losing money. Who am I, right? I have lost a lot of money and I still don't learn lessons. You will have to learn your own lessons by losing your own money, right?
Great, Ashish. I think that's a very insightful message for everyone. And with that, I think we come to the end of the event. I have lot more questions, but I probably have to invite you again for going there. Thank you so much, Ashish, for providing insightful background and the present and your context on it. Thank you so much once again for coming on
Thank you,
Thrive.
Arsh. Thank you, everyone.
Bye.
Thank you so much, Mr. Ashish. Thank you, Harsh, for driving this session. It was a wonderful conversation. So thank you once again. And yes, that ends our first session for Thrive. So I want to see, I can't see Let's Thrive trending on Twitter. So guys, go ahead. Please go and tweet with hashtag Let's Thrive, tag Grow, tag the speakers, tag me, tag everybody. And let's get the event trending. Tweet with hashtag Let's Thrive. And I'm sure we learned a lot of lessons from the first session. We learned about how the trade market or the stock market was considered a satta bazaar, and how we have moved on from that and technologically advanced. Similarly, in India, we always compare ourselves to the US, London, and they have had their fair share of failures. And right now, we are at a very, very good place. The speed at which we deliver the orders, the number of orders we receive every day is phenomenal. And kudos to us as Indians. And Ashish sir also very nicely covered how we take Robin Hood as an example in the US, but in India currently we should cover stories like Groww and Zero Dhab stocks and all the equity brokers. What they are doing is just phenomenal. So I think we all took a bit or two from that session, so would love to know in the comment section what you took back from the first session. And another great tip, he said, learn your own lessons by losing your own money. And whenever we make money, we always say, okay, fine, I'm very smart. I made, some very, very wise decisions. But whenever we lose money, we say, we put it on the SEBI, we put it here, we put it there. So we always take the compliments, but we are not ready to take the losses, but we should. And once we are past that stage, we will see a lot more people even trading and investing in other derivatives. And that was the key lesson from the session today. So thank you, sir, again for joining us today. And thank you, Harsh, for driving that session. So, I hope all of you are excited for the next session. But before that, I would like to tell you that at the end of today's event, we have a quiz for everyone based on some of the speakers, based on the fields they come from. So, definitely stay tuned till the end of the event, because there 10 lucky winners will win some exciting Grow goodies. I can see a lot of comments about Grow goodies. So, if you want to be one of those lucky winners, please, please, please stay till the end of the event. And now, without further ado, let me get started and quickly introduce to you our next panel. So, our first speaker completed his education with a master's degree in financial sector regulation at Physics Honours School, Punjab University. He worked as Chief General Manager at RBI, after which he served as a whole time member at SEBI from 2009 to 2016. During his tenure, he was involved in several impactful regulatory decisions, which included a number of high profile orders. He was overseeing some key units at SEBI, which include Corporate Finance Department, Investigations Department, Special Enforcement Cell, Office of Investor Assistance and Education, and many, many others. After serving a successful tenure at SEBI, he went on to work as an independent consultant in securities market in FEMA, and currently he is working as a senior consultant at Shardul Amarchand Mangaldas and Co. He is none other than Mr. Prashant Saran. Thank you so much for taking our time and joining us here today, sir. Our next speaker is someone who is with us for Thrive's first edition, and she was definitely a crowd favorite back then. And she is back again on popular demand. So our next speaker was born to an Indian diplomat family in Pakistan. She completed her BSc in computer science from University of Pennsylvania, and she did her BSc in economics from the Wharton School. She started her career at McKinsey and Co. and went on to be a portfolio manager at AQR Capital Management. In 2009, she took the entrepreneurial plunge and started her own venture, Forefront Capital Management, which was acquired by Edelweiss Financial Services Limited in 2014. She went on to become the business head of Edelweiss Multi Strategy Funds, where she led the acquisition of Ambit Alpha Fund and the integration of JP Morgan Mutual Fund into Edelweiss AMC. In 2017, she became the MD and the first female CEO of Edelweiss Asset Management Limited. She is India's only female head of a major asset manager and has set up the country's first domestic hedge fund. She is Radhika Gupta, a prolific speaker. So pleased to have you here, ma'am. And this session is titled The Era of Retail Investing Increasing Access to Indian Equity. And it will be moderated by a distinguished journalist, Chandra R. Srikant, editor at Money Control. Over to you, Ms. Chandra.
Yeah, thank you so much. That should be editor, technology startups and new economy at Money Control. But thank you so much, Richa, for the kind introduction. And it's always a pleasure speaking to Radhika. And I'm very happy to meet Mr. Prashant Saran as well, former board member at SEBI. Thank you so much. And on a Sunday, here's wishing all of us, all the viewers joining in, a very happy new year. We also hope you're staying home, staying safe amidst the Omicron scare and the Omicron wave. Now, whichever way you look at it, the last 2 years have been banner years as far as Indian equities are concerned. The number of demat accounts have more than doubled. I saw a very interesting statistic today that spoke about the proportion of women investors in the markets. That has gone up from 16% to 24%. And interestingly, retail participation is not just coming from the top 8 metros, but from tier 2, tier 3 cities as well. Of course, this has also coincided, with the way markets have performed. Benchmark indices are up 40% since January 2020, and domestic markets have delivered returns of 65% for financial year 21. But is the party here to stay? That's what we will understand. And is there scope for retail participation to further expand in 2022? I'm going to start with Radhika. Radhika, thank you for joining us for this session. One other big wow factor in 2021 was the spate of internet IPOs that we saw. It gave you a taste of the new economy. This year, we can look forward to more internet IPOs, but we can also look forward to the mother of all IPOs, LIC, which is pegged at 50,000 crore. So do you think the kind of euphoria that we have seen in the last year will continue, or do you think there is a sense of fatigue among retail investors now because some of these much hyped IPOs didn't really do well? So what is your sense? Is the euphoria here to stay this year, or are you sensing some fatigue? Radhika, are you there? Okay, Mr. Saran, if you can take that question till we get Radhika back. Is she
Oh,
back?
yes.
Yeah, Radhika, if you can take that question.
Yeah, please go ahead.
Yeah, so Radhika, I was asking you, is the euphoria here to stay, or are you sensing fatigue among retail investors? Okay, she's dropped again. Mrs. Saran, you can start and she can chime in once she's logged in again.
Okay. Thanks, Chandra. It's a pleasure to talk to you here. So far as ex-regulator is concerned, ex-regulator is never happy with the euphoria. Although it might to be that almost everybody else is happy with euphoria, he starts worrying the moment euphoria is there. So I think the post-COVID, it will stay for some time for the reason that the world has seen quite bad days in the last 2 years, and the prospect of normalcy will drive all economies all over the world. So therefore, I am not uh, euphoric, to be exact, but I'm quite cautiously optimistic, which almost all regulators are always.
Yes, and there are so many variables this year. You don't know what the central banks are going to do, and if the growth will continue. Even if there is a pullback in stimulus, so are the markets ready for a soft landing? That's also something we have to consider. But Radhika, do you sense fatigue among retail investors, or is the euphoria here to stay? Because if you look at how the Nifty 50 Sensex have performed recently, some people think that there is a sense of fatigue. What is your own sense?
So, and Chandra, I have to apologize because I think you were asking me a question on internet IPOs. We're doing a panel for a fintech. You introduced yourself as editor, technology. You were asking this internet IPO question. And today I'm really struggling with technology issues. So, apologies in advance. I mean, it just happened with all this. I think the word technology was used 5 times. And lo and behold, I'm logging in from a mobile. So, if I have technology issues, excuse me, and I'm happy to take the internet IPO
It's
question
just
after
Murphy's
because I didn't
law,
hear it.
completely fine, Radhika.
Okay.
No,
So
it's
I
just
think,
Murphy's law, completely fine.
it's Murphy's law, especially when you say technology and fintech about 10 times, it has to happen, right? So, it just has to happen. So am I surprised or nervous about retail investor growth? Is there a sense of fatigue? I think there's a few parts to it. One is, while we are all excited about retail investor growth, number of demat accounts, number of mutual fund folios, some of this is inevitable. I think as India becomes a more, developed economy, as you do that journey from 2 to 5 trillion, I mean, world around, whether it's China or US, you have seen an increased element of financialization. So while some of it is very heartening and surprising, some of it is also an inevitable part of India's sort of capital market evolution, given the penetration levels. I mean, in MF, we are about 1/10 of the world average in penetration levels. So should this surprise us? I don't think it should surprise us. And I think there are things to be heartened by, as you said, the number of female investors, the number of younger investors. It's obviously, and I consider myself an older millennial, but it's obviously a generation of people who is more aspirational, whether it's with their careers, whether it's in launching startups, or whether it's with their money compared to, say, my parents' generation. That said, I love the word that Prashant sir used, which also regulators use, but market participants use, is that I think there needs to be a sense of cautious optimism around this. Because I don't think the contest or the victory is in number of demat accounts opened, in number of retail investors coming into the market. It's really in how many stay in the market and how many have a good experience in the market. Because what you also have to know is that financial literacy is at still very early levels. And while digitization and platforms have made access easy, these investors also have to have a reasonable journey. Many of them, as I said, are children of, and I say this in the nicest possible way, all of us were that at some point. Many of them are children of a bull market. They haven't yet seen a bear market. In fact, I think when we had a 10% correction in small caps 2 months ago, you start receiving messages of flutters and panic. So I think it's very important for us as an ecosystem to act responsibly and to make sure that this is not fraught. And a large number of these investors continue through the cycle. There will be some element of froth. There will be people who are disheartened the next time a bear market comes. But how many of these can we really convert into a long-term culture of equity investing? I think that's where the victory lies.
In fact, you've brought me to my next question, and this is both for you and Mrs. Saran. As you rightly said, many of them are children of the bull market. So, what are your own expectations? I mean, does it bother you that these new set of investors haven't yet seen a bear market or a prolonged market correction? Will that perhaps dampen enthusiasm, or do you believe these are investors who are here for the long term? They fully understand the risks involved, the cycles involved.
So I can share my thoughts, and I'd love to hear Sir's view on this. They will have to be. Every bull market produces new investors. So Does it bother me that they have not seen a bear market? No, because I think, unfortunately or fortunately, investors are created out of euphoria, bull markets. It's very hard when there is so much doom and gloom around, and you're from the media industry to expect, a bunch of new investors to come into the markets. I don't think it bothers me, but I think there is a sense of responsibility, as I said, on all of us to make sure that at least 80% of these investors genuinely become long-term investors. And I think there are things that we have to do for that. One is that I think expectation setting is extremely important. You come in 2020, you come in 2021, and your expectations of what equity markets and what equity returns can do, are north of 20-30%. I have investors who tell me that why should I do fixed income investing? जो मैं fixed income में एक साल में कमाता हूँ, वो मैं equity में एक महीने में कमा लेता हूँ. And I think reasonable expectation setting is very, very important. The second is, we are fortunate to be in an industry in mutual funds where there is such a wide range of products. I think building products and marketing products where the investor has good odds of having a reasonable outcome. While choice is something and investors will make choices, I think building and marketing products at the right time where it's likely that the investor's outcome will be good is something our industry can take responsibility for. So I think it's more a sense of responsibility than a sense of fear.
Mr. Saran?
Yes, I would endorse what Radhika has been saying. I do feel that yes, every bull market creates new investors, and every bear market prunes some. Secondly, bull and bear markets, such long cycles may not be there, but there has been recently a short cycle just when the COVID started of bear market. Well, bull and bear market that is there, and people will be dropped. And there are very few investors. I don't think more than 5% of the total investing population who remain consistently in the market. So, remaining 95% of the investors are people who are sporadically into markets. They come in, they go out, and very few consistently invest. So, that is my understanding and reading.
That's a very interesting statistic that only 5% of them are actually, stay the course through all the cycles and 95% are sporadic. I mean, it must be a nightmare to manage this kind of imbalance. But Radhika, one other exciting theme in the last year were these rush of internet IPOs, as I mentioned initially. It gave you a taste of the new economy, the private market, the private markets, and we also saw a lot of interest in it. I mean, if you look at the response to Zomato, Nykaa, it's been brilliant. Of course, Paytm was an aberration. This year also, delivery, for example, is slated to go public. Oyo has filed its DRHP. Ola is expected, and so on. Do you expect the interest to continue among retail investors? Are they now, okay with these companies who will be loss making for some time, who you cannot assess using the traditional metrics that you usually use for a profitable listed company?
So I definitely think internet IPOs and sort of the new age IPO market was the theme of last year. Some people know that we run an IPO fund, and I think the fund managers of that fund have never had a busier year than it was last year. Now I think on IPOs, one structurally, the IPO trend I don't think is going anywhere. You will see more and more new economy IPOs just because the private markets in India have attracted so much capital over the last decade, created so many of these companies that Chandra, people like you cover, and unicorns and X, Y, Z. And these companies need an exit, and that exit is going to be the IPO market. And secondly, India is a very young economy in the sense that our listed markets don't represent a lot of sectors. I mean, India's largest exchange, which is NSE, is still not a listed company. Asset management and insurance companies are still listing. In some sense, financial services in the old economy was all banking and NBFC, and you have all these new age companies. Technology was largely IT services, and now you have a whole new domain of technology companies, whether it's fintech or e-commerce or gaming, etc. So I don't think that trend is going to go away anywhere. And I think retail investor interest in the IPO market has always been there. I mean, observers from the 2005, 6, 7 era would remember the IPO frenzy then. I think it's more elevated now because these are brands that you touch and feel and understand. So when it's food delivery or when it's a makeup brand, I mean, when the Nykaa issue happened, there were just a lot of women users who looked at Nykaa, Zomato. It's a consumer brand, so these are household brands. So in that sense, perhaps they attract a lot of interest. I think retail investors' enthusiasm for IPOs is a good thing. Unfortunately, I do believe that retail investors' experience investing in IPOs, internet or otherwise, has been a little mixed because unfortunately, IPOs have been, reduced to a take leverage, speculate, and have listing day gains kind of story, which I believe is really not fair. I think an IPO is just one event in the life of a company. There are fantastic companies out there, by the way, who have disastrous debuts on listing. Page Industries was down 30% on listing. Doesn't make it a bad company. It's one of India's mid-cap or marvels. So I think IPOs are an event in the life of a company. And I think just by randomly applying for every IPO without thinking about it, I don't think that's a recipe for making money. And it becomes more complicated in the event of new age IPOs. They don't only confuse retail investors. I think fund managers are grappling to figure them out because in India, we also grew up with a certain model of a company, consistently high ROE, profitability. And the world is still figuring out, professional managers are still figuring out how to value these companies. Is it, how to think about loss-making companies? So for a retail investor to go through a 500-page DRHP, I think is an extremely difficult exercise. I think my only message is that while the frenzy continues and while the excitement continues, and it's so exciting to see the entrepreneurship, as a retail investor, you should be discerning, you should be disciplined. That is extremely important. And remember, an IPO is just an event in the life of a company. It's not the be all and end all.
Agree. It's just an event, but an event nevertheless that tends to improve equity participation in the markets, at least from retail investors. But as you said, very important to be discerning as well as disciplined. Mr. Saran, when it comes to some of these new age, internet companies and IPOs, I mean, SEBI has done its bit to protect the retail investor as much as possible. For example, the retail portion in some of these offers is, just 10% for loss-making companies. A majority of it is QIB, and they recently also amended rules where they've capped 35% of the IPO proceeds, only that much should be used for an unspecified inorganic event or acquisitions by the company. But is there more that SEBI can do, the regulator can do? Because I remember after the Paytm IPO debacle, there were requests from investors that, what is the market regulator doing? But realistically, can SEBI really do anything? Because this is ultimately an investor's call to invest or not in a company.
Actually, the seeds of this problem lie, something like more than 30 years back, when there were CCI issues were there, and there was, FERA dilution those days. So getting an IPO allotment was like a lottery. If you got it, you made it. So that legacy has not gone from the mind of retail investor. In my opinion, an IPO investing is one of the most difficult things to do. But because of the CCI legacy, that is continuing, and that is continuing as a punt for the listing day gains. So this is not a very happy state of things, but this is how Indian retail equity market is. The all SEBI can do, SEBI doesn't follow a merit-based regime. It doesn't tell you what price is right. It doesn't tell you which issue is good. All it says that you will be told everything about the issue which is worth knowing. That is what. Now that brings us to a question now, that whether the 500-page DRHP is an exercise in futility, that whether anybody reads it. And there are people who have told me that there are only two type of people, two three type of people read this 500-page document. One, who write it. Number two, the junior most officer in the regulator who goes through line by line of the document. And third, the partly some part of it, the research analysts. Rest everybody goes by the word of mouth. So that is what I am told many a time, which happens. So the question which Radhika asked very rightly, well, does it make sense at all to have a DRHP which is 500 pages long? This issue has been on had been worrying the regulator for a very long time. So they have tried almost all kind of tricks, but every trick which the regulator plays can be played better by the market. So so when we say disclose these things, so they will disclose risks. So they will kind of start disclosing a huge series of mundane risks which are kind of a run of the mill, which are anyway there, and a very important risk will be lost somewhere. So this is one thing. So what we started doing is to have a I am forgetting the name, some brief there was with along with the application. Now, there is a brief about the IPO, which is not more than 10 pages, and they have said that it cannot be less than 12 points in font and all those things. So those are things, but they are basically just telling you the financials and some very important things. But I really don't agree to it that having a 500-page DRHP is an exercise in futility. For the reason that, number one, it puts the issuer's position on paper permanently. He can be pulled up for that any point of time. So he is extremely careful what he does. And then the merchant bankers are very particular about it too. So any company which does an IPO does a vast amount of spring cleaning in the company. And that spring cleaning comes because they have to disclose 500 pages, that DRHP, their lawyers, their merchant bankers ensure that clean up this mess. And you will be surprised to know that how many show cause notices are issued because of that spring cleaning. All old violations are brought up
Got it.
to the market, and well, this is what happens. So I would say it does serve a purpose, and the research analysts do pick up, and their recommendations still do matter, of course.
Thank you for that, sir. Radhika, you mentioned how internet, was the big theme last year as far as markets were concerned. So, for retail investors watching you today, listening to you, or even potential retail investors who want to come into the markets, what's likely to be the big theme this year? Will it be the big bank LIC IPO? Will it be something else? What in your mind is going to be the big theme for 2020?
Okay, so I get this question, as a MF manager a lot about what the big theme is. I believe, I think globally all over and in India, finding the theme of the year has become sort of a new fancy. One, I think it is, and I will answer your question here at some point. And one, I think it is extremely hard to predict. Secondly, I think for most retail investors listening, I think in a country like India, where equity market growth is meaningful in itself, where your indices at the headline level should hopefully return 12 to 15%, I think broad-based diversified equity is actually timeless. we did an interesting analysis 2 years ago at Edelweiss Mutual Fund, where we said, let's look at what was the most hot selling theme of that era. And we started this analysis from 2005, and there was a power phase and an infra phase and an FMCG phase and a gold phase and a mid and small cap phase during Acche Din, etc. And if you look at the returns of investing in the flavor of the season at any point in time, it was about 2% less than just investing in a plain diversified Nifty product. So while I'm all for themes and thematic investing, I really believe one of the themes that has emerged for me in the last 2 years is we need to go back to basics and get a lot more simpler. I think an investor's portfolio, if you have to divide it into 80-20, is 80 dal chawal, which I've gotten bored of saying, 80 really basic stuff and 20 thematic. And because the 20 in the outside food is so exotic, we spend so much time talking about the 20, and the 20 suddenly creeps into the 80. And suddenly I actually see people's portfolios are a collection of themes. So they'll have some electric vehicle fund and some IPO fund, and I'm taking my own case here, and some, manufacturing fund and some business cycle fund. And suddenly it's one whole collection of themes. So I would caution you from chasing after the theme of the year and encouraging everyone to go back to basics. That said, I think new economy listings will continue to happen. I think they were a theme last year. They will continue to be a theme for this year and maybe going beyond. And that's not a single sector. So it's not e-commerce, it's not logistics, it's not beauty. It's all these new economy. It's not fintech. I mean, it's all these new economy sectors where so much private capital has come in. But my meta point about themes still stands.
Interesting. I agree on your view on themes and why it's become so fancy. But Mr. Saran, from a regulation perspective, SEBI's recent discussion paper on how retail investors should approach algos has come in for a lot of attention. So do you think that is perhaps going to be key from a regulatory perspective? What should retail investors look forward to this year?
I'm not sure what you meant by the question. Now, if it means that whether the retail investors would do well to adopt algo trading, if that is a question, I would say that yes. So there is no reason that why retail investor should not adopt algo trading, for the reason that this brings him to a better level playing field. So the issue is this, whether that algo is a worth taking algo, worth relying upon algo, or it is not. So there is a need to standardize the algos. There need to be some gatekeepers for the algos to come in, some kind of standardization, some kind of responsibility with the algo. So I won't say that retail investor should remain a few hundred milliseconds behind the algo traders always. So I won't really agree with that. Yes, why not? They should also be at the top of the layer. Why not? You're not able to hear me?
I could hear you, sir. I think Chandra's connectivity has taken a little bit of a toss. So I'm assuming she's coming back.
Today's technology is playing a truant.
Yeah, and it's, as I said, so strange when we talk about we're doing this on a fintech platform. Chandra was just saying she's covering technology,
Yes.
and technology plays a truant, just when you least expect it to.
No, I would say old technology is playing that.
Yeah, correct.
Because 4G systems are not taking the stress.
Yeah.
Radhika, you've passed on your problems to me. Now my technology is giving me trouble.
So that's what Prashant and I were talking about. We were trying to pass time while you went away by talking about how old technology is playing trouble. Now it's back to
Okay.
you.
Yeah, Radhika, the elephant in the room that everybody talks about, of course, is, cryptocurrencies, what we are going to do. And, an argument often comes up on, whether this will be the biggest driver for equities. I mean, will it replace equities at some point? Because we are seeing a lot of young investors just throng to crypto. What is your own sense on how this will pan out?
So I don't think I get as much flack on social media for any topic as I do on my views on cryptocurrency, and yet you've asked me this question, and I also hope you pose this question to Prashant sir, because
I
I would
am,
love
I
to hear
am.
it. I would love to hear a regulatory perspective on this. So one is, I am going to give a disclaimer that I think me and many others don't understand cryptocurrency enough to talk about it. So let me start by saying that. And yet, I won't run away from the fact that it's an absolute craze. I went to Delhi this time for Diwali, and it was an extended trip. So I was there for about 4 or 5 weeks with my parents. And, at that point, there was no Omicron, so there was a lot of social activity happening. And, there were two things happening. One, there was a lot of curiosity around mutual funds for a market that's been heavily real estate. So that was nice. But for every one question I got around mutual funds, I got 10 questions around cryptocurrency. 10 questions around cryptocurrency. And, I hang around on Twitter sometimes, and, there's these spaces going on, Chandra, late at night. And on average, one of these equity market spaces will have 300-400 participants, right? The cryptocurrency spaces have 3,000. Okay. And so I've started rationalizing with people who ask me about cryptocurrency, including close family, about why they should invest in cryptocurrency. I said, if you're investing in an asset class, it's very important to know why you're investing in the asset class. If you're investing in Reliance Industries or HDFC Bank, you're expecting that the companies will earn a certain profit growth and that will lead to an appreciation in the stock price. The answer is almost singularly that my friend invested and made so much money. And I think FOMO has become an incredibly powerful force as far as cryptocurrency. My only two takes on this are one, there is not a proper regulatory environment for cryptocurrency, and I understand it is being worked on. And I think that for a retail investor, you should always invest in an asset class that is regulated and that has investor protection mechanisms. I mean, we just talked about the fact that when a few internet IPOs did badly, suddenly everyone is starting to ask the regulator, put more curbs around IPOs, when actually the regulator on IPOs is doing a fantastic job. I mean, it's not their job to control how IPOs are priced. Imagine if something happens in cryptocurrency. The second thing is, I think, again, expectations need to be moderated. So some of the advertising that has been happening, concerns me. I mean, we in the MF industry are putting out ads where Sachin Tendulkar is going out and saying, mutual fund hai, magic fund nahi hai. At least it is, you're trying to set fair in cryptocurrency. So that is my take. I hope that the asset class finds, a good
Yeah.
regulatory paradigm, and after it does, I'm sure SEBI will allow retail investors to invest if they deem fit. Till then, I think it's a little premature.
Got it. Mr. Saran, we in the last 5 minutes, so, final two questions to you. First, on crypto, there were reports last month that, the government might ask SEBI to regulate cryptocurrencies. So what sort of a challenge does this present, considering by nature it is decentralized? Can you actually regulate an asset class which is decentralized? And my final question to you, sir, what role can fintech apps play beyond onboarding customers, making the whole process paperless? Is there more they can do to handhold retail investors? That's my final question for the session.
So I'll be talking more in bullet points because the time is so less. One, now regulator cannot regulate the cryptocurrencies because it is decentralized ledger. But what regulator can do is to regulate the crypto exchanges. The point of pain is when cryptocurrency is exchanged for the fiat currency. That's the point of pain. So there, the onboarding, there the how good the exchanges are, that comes into play. Number two, I really don't know what is in SEBI's mind. I retired 5 years back. But what comes to my mind is this: when I have been interested in this crypto space quite a lot. When I see crypto space, I see two things. Number one, I see some kind of a tulip mania. The Bitcoin was the first application of distributed ledger technology, and it just took off. So that is the crypto tulip mania part, which I think people might gain, might burn money. That is something. But what I am extremely excited about, and which I think is the changing, is going to change everything, is the distributed ledger technology. This will change the way financial markets are, the way the intermediaries exist, the way exchanges exist, the way banks exist. The entire intermediary universe is going to be disrupted hugely. And the moment you have got fin P2P, that is, so there is no need for an intermediary to come in between, and people can create and there are smart contracts which are self-enforcing. So with this kind of a thing, number one, what's going to happen, that lot of asset classes which were not into the public markets, like one, private equity; two, you can think of the real estate; three, you can think of even space travel and hospitality, whatever. So all these classes, which are at least two orders of magnitude higher than the present financial assets which are on the exchanges. When this comes to the market, what is going to happen in the market is extremely, I mean, you can't really imagine what is going to happen. So the important point of this stage is this, that intermediaries, which includes mutual funds, which includes exchanges, which includes banks, everybody, these people should be very, very worried about the possible disruption which the DLT technology might bring in the next 10 to 15 years. And they should be prepared to take advantage of it rather than being run over by it.
On that note, thank you both very much, Mr. Prashant Saran as well as Ms. Radhika Gupta, for giving your insights. And I'm sure a lot of retail investors, even those on the fence, benefited hugely from this session. Thank you very much for joining us on this session at Thrive.
Okay, thank you.
Thanks,
Thank you
Chandra.
so much. Thank you so much for joining us, Prasant sir, Radhika ma'am, and Chandra ma'am. I think it was a wonderful session. And thank you for keeping it as candid as possible. I'm sure we have a lot of comments waiting for you. You can go ahead, read them. And I think we're in a crunch of time, so I'll quickly move on to the next session. So thank you once again for joining us. And let me just quickly introduce you to our next set of speakers. I think we're running 5 minutes behind track, but we have a fabulous lineup for you. So, our first speaker is an alumnus of Swami Vivekanand College in Chennai, where he did his MCom in Finance and Financial Management Services. He has been working at NSE for almost 27 years now, almost since its inception. He was associated with the clearing corporation of NSE initially and was also involved in capital market and surveillance operations. He represents the exchange in various committees in SEBI and has been with the exchange since 1995. He was involved in launching derivatives in India and was heading listings at NSE for over 10 years. He was also involved in launching the NSE SME platform Emerge and has handled various profiles, business operations, surveillance, clearing corporation, membership, corporate communications, to name a few. Currently, he is the Chief Business Officer at the National Stock Exchange, better known as NSE. He is Mr. Hari K. Thank you so much for joining us here today, sir.
Thank you.
Thank you, sir. Our second speaker did his bachelor's degree in mathematics from Bharat Dasan University. He then went on to complete his MBA from IIM Bangalore and is also an alumnus of Harvard through their advanced management program. He started his journey at Aditya Birla Sun Life Mutual Fund in 1994 as a senior trader. He served as Chief Information Officer from 2006 to 2009 and currently oversees rupees 2.7 lakh crore in asset under management at Aditya Birla Sun Life AMC, one of the leading asset managers in India, with over 26 years of rich legacy of wealth creation for its investors. He is on the board of governors of National Institute of Security Management, better known as NISM, which is a SEBI established entity. He is also on the committee of corporate bond market development of SEBI. Apart from these prestigious roles, he plays an active role in AMFI as a board of director. He has also held the position of chairman of AMFI for 2 years from 2016 to 2018. He is the MD and chief executive officer for Aditya Birla Sun Life AMC Limited. He is Mr. A. Balasubramanian. Thank you so much, sir. You have some fantabulous credentials. Thank you so much for being here today.
Thank you. Thank you.
And our third and final speaker holds a commerce degree from Mumbai University and a Master of Management Studies degree in finance from the Narsi Monji Institute of Management Studies, Mumbai. He started his career with SEBI in 1996. He spent the next 10 years in various functions, including the derivatives and new products department. After making his mark at SEBI, he joined DSP Merrill Lynch Limited as Director, Law and Compliance. Here, he headed the broking and investment banking compliance for a period of 3 years. He joined BSC after his sterling stint at DSP Merrill Lynch. He spent 10 years at BSC, where he headed all the regulatory functions of BSC. Currently, CDSL, under his leadership as the MD and CEO, has become the leading depository of India with over 2 crore beneficiary accounts and is the first and the only depository to launch its branch at the International Financial Services Center IFSC at the Gift City, Gandhinagar. He is none other than Mr. Nehal Vora. Welcome, sir. Thank you for joining us. This session, titled Increasing Collaboration Between Regulators, Market Intermediaries, and Investment Platforms, will be moderated by, again, a very distinguished journalist, Jash Kriplani, Assistant Editor at Money Control. Over to you, Mr. Jash.
Hi, thanks a lot for that, Richa. So without wasting any time, I would just like to get into the panel. And first of all, welcome all the panelists for joining us today. Thanks a lot for taking time and on a Sunday and joining us today. So I would like to start with Bala right away. Sir, as AMFI chairman and also somebody who has seen mutual fund go through so many changes over time, there have been so many regulatory changes over the years, and also, whenever we have spoken with mutual fund industry, we have always got the feedback that whatever is good for the investors at the end of the day is good for the industry. So how do you think that these changes have benefited investors? Can you talk a bit about that, sir?
Sure. Thanks, Jesh, and good to see my other panel members whom we talk on a daily basis. And first of all, let me also wish all the viewers happy New Year and happy Pongal and Shankranti. I think you talked about the changes. I think you yourself answered in your own question that whatever happens from the regulation point of view is all in the interest of investors at the center. And the investor at the center, then as the industry gets bigger and bigger, all the risk associated with the investors have to be reduced in a manner that they're able to put their hard-earned money for the longer term through the mutual fund product. And what's the changes have come over a period of time? Yeah, I've seen the regulation. When I joined the Indian mutual fund industry, there's no regulation. And the SEBI itself was set up in the year 1992-93. That is the time I also started my career in the Indian mutual fund industry. And we have seen this entire regulatory space evolving over a period of time on the basis of the experience which the investor goes through, the experience the market creates, the experience of the money managers who are all the manufacturers all of us go through at every point of time. And sometimes we make mistakes. We suddenly realize, why did we make these mistakes? and then that leads to some kind of thinking and thought process, and then regulation comes in. So that's the way it got evolved over a period of time. The very fact that despite all the changes happening, the Indian mutual fund industry today has got more than 38 lakh crore of size. And in fact, as I speak, the equity assets and management have gone to 18 lakh crore size, coming from close to about 3.3 crores unique customers. That actually shows the proof of how the regulatory changes happening on one side and continue to boost the confidence of the investors to put money in mutual funds. That's the way it got evolved. Definitely, these changes have come on the back of the experience that as the market gets evolved, I think each time the risk actually is associated with the market keeps changing. The new things comes in. Sometimes today's, of course, the risk is more about cybersecurity. I think probably one can talk about it, given the fact that and everything now is being using the technology platform. But all such risk arising, which could potentially impact the investors' confidence over a period of time, those actually get revisited from the regulation point of view, and that's where it got evolved. So I always believe that the mutual fund one industry is extremely transparent and extremely clear about what they are doing, how they are doing. I don't think even the worldwide, the mutual fund industry is worldwide, will be as transparent as what we are seeing in India. And despite such a transparency being there, the mutual fund industry continues to grow, and money is able to actually deliver what they are supposed to deliver within the regulatory framework that which we have to operate. So I always believe that as industries start growing, I think what is most important in any business, even human psychology that happens, there has to be a boundary. And all of us have to operate in a boundary. Ultimately, we are all the players in the mutual fund market. And each of been given the task of managing the money in a different way. Therefore, we need to operate in a boundary. Therefore, all the regulatory framework, if you see, is a boundary that has been defined. Within the boundary, when we operate, clearly you know the rules and regulation of the game. You know what is our operating parameter in which we have to operate. That gives greater comfort for the customers and investors. And that's something I would probably say, as you rightly put it, and any change that has come, and since the boundary has been created, it's been extremely helpful for the investors to know what they are doing, how the money is being managed. At the end of the day, the longer term comfort has to be created on the basis of the visibility that one has got on everything that they are giving. This is something I take pride that mutual fund industry has been achieving this quite significantly in the interest of investors.
Sure, Bala, that point is taken. And coming to you, Mr. Nehal, I also wanted to understand from you, you have handled regulatory affairs at Bombay Stock Exchange, and now you are heading Central Depository Services Limited. What kind of changes you have seen in terms of regulations, and how has that helped investors, especially when we are talking about capital market access? If you can talk about that, sir.
Yeah, thank you. First of all, I'd like to thank Groww for really inviting me, and a big hi to Bala and Hari. Um, so, in terms of, I think SEBI's journey started in 1995, as Bala mentioned, that where the real reforms in securities market started. And the true vision is moving from a physical market to a digital market, be it in the trading side or in the depository side, on the clearing side. I think the biggest dividend of that vision is seen today, when during COVID, every industry was kind of, during the lockdown, had to face some kind of a disruption. But the securities market continued without a second of disruption. And it not only ensured that MIIs could work from home when the lockdown was in existence, or in a very, very thin staff from office, but also the investors and the intermediaries could work from home. And that's the power of technology and the digital journey which has happened. Also, what this has entailed is it not only maintained its level, but it grew exponentially during the COVID. Uh, if you see the number of UCCs which have grown, it has grown significantly from about uh, 4 crores to 8.5 to 9 crore UCCs. Demat accounts, which were averaging about 4 lakhs a month, has now averaging around 28, 29 lakhs a month during COVID. And What this has entailed is that a lot of new time investors, especially from tier 2, tier 3 towns, have started coming in. What they have seen is that it's completely and truly paperless. So, right from account opening, especially in the demat space, to transactions, and even the trading settlement process is truly paperless. But more importantly, recently what we have moved, and a lot of MIs have brought in reforms. At CDSL, I can tell you that we have moved, while it's a B2B business, the authorization for our electronic instructions is a B2C, where the customer has to put in the TPIN and OTP directly with the depository before the transaction gets accessed. And then that is correlated with the clearing corporation's positions for that customer before the transfer is effected. Now, this is what brings in the trust in the system. This is what brings in confidence in the system, that despite there being an exponential growth, despite people nearly working from homes, the system has not only ensured the integrity by and large of ensuring that accounts are getting opened properly. There has been no issues as of now, but also it has shown that despite the increased participation, the MIs have been able to kind of grow and keep pace with with the increased demand which has come. This has not only created a source of investment opportunities for a lot of retail investors, but even for some of them a source of livelihood when all other forms of revenue or economic activity was muted. And this, I feel, is the biggest contribution to the country. It's the biggest economic purpose why this entire vision is extremely critical. And this shows that by bringing in more regulation, it is going to increase the safety, the integrity, but ensuring with technology being the backbone, the convenience factor is not getting compromised with all of this. So this is what I feel were initial thoughts as to how this has really ensured that India has continued to, especially the securities market, to continue on the growth trajectory despite the COVID.
Right. Thanks, Nihal. And coming to you, Hari, I wanted to get you in and get your thoughts on how, we have seen so many new developments at National Stock Exchange, so many product developments, so many indices is what I'm referring to that NSE keeps coming up with. And, especially in the passive space. And mutual funds have been also, using these indices to come up with passive products. So do you think that this is helping to simplify the investment process, and is it also helping more investors come into the capital markets?
Hi, good afternoon to all. Thank you very much for having NSE in the panel. Good to see you, Bala, Nehal. So, yeah, passive, I mean, basically, NSE has been forefront of innovation. So if you see, we have introduced quite a lot of products. As we speak, we have just introduced Nifty Mid Cap Select Index, the flavor of the season, wherein we are going to have derivatives on that maybe from Jan 24. But coming more specifically to your question on passive products, I mean, as you know, passive products typically represents the underlying index. And you buy a passive products, you actually buy the constituents of the index. In fact, fund managers do not use their discretion in a passive index, right? So if you buy one ETF, one unit of an ETF, that means you're buying the whole constituent of the full passive fund. I mean, when you talk about passive fund, Nifty is the most popular of the passive funds. More than 75% of the AUM is on the funds which focus somewhere or other on the Nifty. Majority of the fund managers, in fact, try to find it difficult to beat the passive fund also. The passive fund industry, I think, is grown phenomenally higher. I think the AUM is about 4.4 lakh crores now. And it actually accounts to about 12% of the MF industry's AUM. Okay. So that's where passive funds are very attractive, very important. And from a retail investor's perspective, you don't have to apply your mind. You just go and buy a passive fund because it follows the market as a whole. The ETF's folios, we've got about 85 lakh folios, out of which about 70 lakh folios, mostly retail, have come in the last 18 months. As of today, we have about 5.5 crore investors in the market. And as you know, about 2 crores have come in the last 18 months again. So we are seeing a huge, transition in people coming and using ETF as a product, right? Because if you asked me this question sometime back, I would have told you that ETF is not very popular, right? But now ETF has really taken the next league and it's going to the next level. For example, Nifty 50, the first benchmark ETFs was launched on Nifty 50, correct? That is Nifty B's way long time back. Then we also, the first divestment by the government of India came through Nifty CPSE ETF, which was also very popular. And lastly, the Bharat Bond ETF also followed, Nifty Bharat Bond. So, it's not trivial to say that the industry has grown phenomenally. As of today, as we speak, we have about 110 ETFs listed on NSE. Not to leave the debt product. On the debt market, we in the last 2 years, the debt ETFs have gone significantly higher. Okay, it's about 50,000 crores of AUM. It was only about 3,000, 4,000 crores about 3-4 years back. So yes, we are as an industry and as a passive investment and ETF as a whole, we are doing phenomenally well. But India being such a large country, we have a long way to go from here.
Right. Coming back to Bala, I also wanted to ask you, because you have been one of the proponents of debt markets in India, and you have seen, how debt markets have shaped up over time. What do you think, changes that can be made, regulatory speaking, that can, get more money in debt markets and capital markets through that route? Equity markets, of course, have gone up significantly and seen a lot of interest in last 1.5 years. Any thoughts on this, sir?
I think it's been part of the discussion since the time the mutual fund started and all of us started working for the debt capital market development. And this is one area we have still not seen a significant participation coming from investors, either in the direct ownership of bond market or through the mutual fund. I think clearly the mutual fund have done a great work in terms of reaching out to the retail investors and offering products that caters to the different duration risk which the investors can take, and portfolio managers can also manage on meeting the expectation of investors. There's one such instrument that has now started coming is the debt ETF or maybe a debt index fund. I think jointly with the NSE, when we have been offering some products, which will have, of course, 1 year to maturity, 3 year to maturity, 5 year to maturity. You know very well that what maturity you are buying. You also know very well that what is underlying security that you go and make investment. That gives the two things. One, of course, predictability. Second, you know upfront what is the quality of paper you'll be buying and selling in this portfolio, and what is the likely expectation of return that one can build. That's it now is building. I would assume probably this will be the next wave of the debt index fund would probably cater to the needs of investors, growing needs of investors. Second, of course, is I think as people are excited about investing in equity, I think they must also invest in the bonds, especially which are either you can say sovereign bonds or AAA bonds. That's something they're all used to buying bonds if it is issued in the secondary market or in the primary market, sorry. The same way they are used to buying fixed deposit offering that comes through the various channel partners, various distribution channel partners. That's something they're all used to buying. The same way the bonds also, if it is offered, like RBI has taken a call that how to retain it out the government securities bonds. And recently I remember Prime Minister launched along with Governor of Reserve Bank of India, offering retail government security, securities to the retail market. That's something assuming we are able to make it really work. The addressable population is very, very high. The need of investors who actually do not want to invest in equity knowing rather having a feeling that the element of risk associated with them, but they want to protect the capital. All such investors can actually come into the bond market, either through the direct buying of bonds or through the mutual fund product. I think the more of awareness that needs to be created, and people should also understand, given the fact that regulatory framework today suggests these bonds have to be mark to market on a daily basis. Therefore, you see some kind of fluctuation. But as long as they understand the way equity market fluctuation, they understand. The same way they understand the debt market fluctuation and still gain a confidence. Yes, I'm investing for a certain period, but intermediate period, probably the market will be volatile. But if I hold it for, let's say, 2 or 3 or 5 year period, I'll probably get a better return than what otherwise normally get in any other instrument. I think that's the feeling if it comes that we're trying to do the awareness. Today, the mutual fund side that all of us are rolled out. Broadly, we advocate investing in more of asset allocation fund or maybe investing in equity in the form of an SIP. Maybe the next step that one need to do to create awareness about investing in bonds through the mutual fund as well as the direct bonds. I think if these two are addressed, I think the large pool of the risk associated with the asset allocation by investing only in equity but without knowing when the market goes through some kind of correction, all of them will actually start wondering why the portfolio is correcting. In order to create a holistic portfolio, I think developing the bond market through this methodology would probably be the one of the way forward, I would assume.
Sure, sir. That makes a lot of sense. Nehal, I also wanted to ask you, we have seen equity markets gain a lot of investors in the last 1.5 years. And you also mentioned in your previous response, briefly, you touched upon, how technology has played a role in this. Can you talk a bit more about this? How because a lot of first time investors have got onboarded in last 1.5 years, so how technology has played a role, how regulations have enabled more use of technology to make sure that the process becomes more smooth and it becomes a lot more easy.
Yeah. So I think there have been a multiplicity of national level databases which have helped the cause. One is the PAN database. PAN is a unique identifier for opening of a demat account, and there is verification done in terms of the PAN database. Earlier, what we used to have a cancel check concept. Now we have something called a penny drop concept, where 1 rupee is put in and that gets verified by the bank. So there is the bank. But what this enables that the response is extremely fast because it's all application protocol interface based or API based, where the back offices and the mid offices of tech enabled intermediaries can gear their systems, and the system is able to keep pace with the speed at which they would want to start opening accounts. Also, the concept of a KRA, I think it's a very important policy initiative which SEBI has done. What it has essentially done is that once the KYC, which is normally a pain point with a lot of investors, once you get registered with a KRA, the KRAs have also an API based solution where the next intermediary who wants to trade with the same investor can just draw upon the KYC which is in the repository. And the KRAs, though they are multiple in numbers, are all interconnected. So you don't need to be registered with all KRAs before you can trade. And that brings in a lot of ease at which you can do. The fourth is the transaction basis. So today, a lot of the authentication of, especially on the DMAT space, margin pledge. I think I missed out on margin pledge. It's a very important reform that SEBI has brought in. What it has essentially done is that the stock doesn't move out from the investor's account, but there's a financial interest created by a pledge repledge system, and that can go right up to the clearing corporation. What this brings in is twofold very important reforms. One is it brings in transparency to the investor that the pledge which he is intending to do, he or she is intending to do, it's going there only, and he has complete visibility. Second is the person who is pledging it, or rather who's the pledgee, the recipient of the pledge, is ensured through a systemic check that the investor will not able to create another financial interest or sell those stocks. And that brings in a lot of trust and integrity into the system. Third is also it is kind of the investor is able to exactly know that which all ISINs are or which all stocks are pledged, etc. Now, what this has brought in, that there is an ease of not only account opening, because had it only been account opening and not followed by the transaction ease of doing business using technology, it would have, the system would not have been as seamless. But what this has entailed is that right from account opening to transactioning to pledging to clearing to settlement, all thing can be done through a very seamless technology enabled API solution. And large today, if you see the top 10 brokers of the country, most of them are applied technology companies like Groww, where a lot of focus is on the technology backbone to ensure that the customer experience is customized and tailor made to the customer's requirements, and it's not a one size fits all. And that's a very important paradigm shift which has happened in the Indian securities market, because technology and API based framework has enabled the system to tailor make itself for each individual customer's requirements. And a person today, even in the mutual fund space, I know there have been a lot of technological advancements, be it the SIPs or the systematic withdrawal plans or the systematic transfer plans. There can be a tech enabled solution which has been put in place. And what this entails is that technology A is objective, it does not lie, and it gives a level playing field to all, and it is time stamped. So that brings in a lot of honesty and integrity into the system. At the same time, the speed at which it can really do, it can do multiple things at the same time without compromising on any of the controls.
Sure, Neil. That gives a good picture of the whole landscape, how it has changed and what it is right now. Hari, I wanted to ask you about how, couple of years back, SEBI had said that, investors can directly invest in mutual funds on exchanges. How has that project taken off? Has that really made a difference, and are we seeing a lot more investors taking up that facility, and how do you see that growing and maybe getting more investors over the years? What's your overall sense of this?
Yeah, rightly said. A couple of years back, SEBI enabled this facility. So we have enabled both the platforms, one through the IFAs and one through the direct route. We are seeing good traction. So what typically happens is that when the new product takes some time to penetrate into the market and then get some results. So that's, we are in that stage now. While the IFA route is also very popular, this route is also fairly popular from a member perspective. So what we also do is we try and do a lot of programs, and see, awareness is very important because people don't know. In fact, this question itself, many people will not know. Oh, is it a facility like this? Because it's not been as popular as the normal traditional route has been. So what we do is we take a lot of effort in educating people, because these are the various routes available for you to come and do. And so after that, if you've seen in the last 6 months, like everything has grown, yeah, this has also grown in a big way. As Nehal was talking about technology, I think technology is a very big enabler, especially in the situation where we are today. I think many people have started looking at technology, looking at better means to connect to the exchange. Sitting at home, like how we are doing it on a Sunday afternoon. We never thought we will do this on a normal day, right? So that's how it is being evolved. I think over a period of time, maybe in the next 2 years, you'll see far more traction in that question. Yeah.
Sure. Thanks, Hari. I think with that, it would make sense to close this panel because I think we are running out of time. I'm really happy with the discussion we had. Hope you all also thought that it was fruitful, and most importantly, I hope the listeners found it fruitful. I think we covered a lot of points, having experts from capital markets, exchanges, and mutual funds. So thanks a lot for taking time and joining us, and hope to see you next time on Thrive. Thank you so much.
Thank
Thank
you.
you.
Thank you for the
Thank
Thank
you.
you. Thank you.
Thank you so much, folks, for joining us again. And thank you, Josh, for moderating this. It was wonderful. So, we again, yeah, we do hope to see you again and again. And yes, let me quickly move on to our next session. What a fantastic crowd, guys. I think it was a wonderful discussion. We learned so much. And we talked about how technology has been an enabler in this session. And I think that is generally what we're sensing around all the conversations. And let's not waste any more time and move on to our next session. So, our first speaker here completed his bachelor's in economics from Sri Ram College of Commerce and holds a master's degree in development economics and international development from Duke University. In his early years, he worked as the deputy general manager at RBI before joining the founding team of Aadhar. At UIDAI, he was an assistant director general who played a key role in designing India's direct benefits transfer, the DBT system, especially for cooking gas and the electronic KYC, better known as eKYC to all of us now. After his stint at UIDAI, he again joined RBI as general manager and Asia regional director at BFA Global before his appointment as the CEO of Reserve Bank Innovation Hub, which was announced last year by the RBI with the aim to promote innovation across the financial sector by leveraging technology. He is Mr. Rajesh Bansal. Thank you so much for joining us here today, sir.
Thank you,
Now,
Rich. Thanks all.
thank you so much. Our next speaker completed his BCom from Sydenham College and is a gold medalist chartered accountant. In his early years, he worked as the chief investment officer at Franklin Templeton India and ICICI Prudential AMC Limited. He was the recipient of the inaugural Business Standard Fund Manager of the Year Debt Award in 2004. He was also a part of the team that received the Best Fund House of the Year awards at Franklin Templeton as well as ICICI Prudential. After that, he was appointed as the MD and CEO at Axis Capital Limited. He has over 25 years of experience in capital markets, having managed funds across equity, fixed income securities, and real estate for local and global investors. He is currently the MD of He's MD at Kotak Mahindra Asset Management Co. Limited. A bibliophile, he enjoys educating investors on financial planning. He is Mr. Nilesh Shah. Welcome aboard, sir. And this
Thank you.
session, titled Bridging the Financial Inclusion Gap Between India and Bharat, will be moderated by Khyati Dharamsi, a distinguished freelance journalist. Over to you, Khyati.
Warm Bansal and Mr. Nilesh Shah. Thank you, Richa, for introducing them. And it's a pleasure to take the discussion forward from here. Firstly, to bridge the gap, we need to know where we stand on ground. So I would invite Mr. Nilesh Shah to tell us, in terms of savings, where do we stand currently and what's the kind of portfolio difference between Bharat and India?
In terms of savings, we are a reasonably savings-oriented society. Whether it is India or Bharat, people tend to save. Obviously, there are always exceptions to rule in a heterogeneous country like India. But when it comes to investment, we are probably not the best investors in the world. To give you a small example, in last 21 years, we have remitted $443 billion for net import of gold. This is excluding jewelry exports. We are the largest holder of the gold in the world since time immemorial, and we are the largest buyer of gold in the world even today. Now, when this gold comes in jewelry form, obviously there is some employment, there is some growth in economy, but bulk of this gold lies into Tijori in parallel economy. It's a frozen savings of India. If this $443 billion would have invested into financial assets like bank deposits, mutual funds, insurance, maybe we would have created $1 trillion GDP, which is 25% of today's India. So we are a good saver, But when it comes to investment, we tend to migrate towards real estate, towards gold, towards land, and not towards, let's say, bank deposits, equities, mutual funds, insurance policies as much. Obviously, things are changing in recent times. And one more important point is that India and Bharat, is not necessarily urban and rural. Even in a city like Mumbai, which is technically India, there is an underbelly like Dharavi or some other place, which is Bharat, where people are investing in cash, people are investing in gold, people are investing in real estate and not necessarily in financial assets. But broadly, we as a society have not necessarily adopted the best investment decisions.
Truly pointed out, sir. As RBI says, 85% is invested in physical assets across, India. So, Mr. Bansal, we would like to understand your, a decade ago, we could say that not many people have bank accounts. Thanks to, Jandhan and mobile as well as Aadhar movement, quick started by you in a way. Uh, we have today, 80% of India that has bank accounts, but 48% are inactive. So, where did, the jam trinity fall short?
Thanks, Kathy. Thanks for having me over. So the point is there an echo or you can hear me clearly?
I think it's fine.
Okay, thanks, Nilesh. So as you are aware that 2014 we started PM Jandan, and then with the DBT, which is now called as overall Jandan, Aadhar and mobile. And as you mentioned that 80% of households have an account, and we score very highly on the World Bank Global Findex, but account activity is low. So how I looked at is that there was a lot of focus in the first few years on having an account, but we have yet to solve the problem of access to that account. Well, access can happen either through a self-service mode, which is your own phone, or through an assisted mode, that is a business correspondent of bank. And the challenge that we have observed is in terms of, despite the fact we have 600 million mobile phones, smartphones rather, a lot of people, even out of the 600 million smartphone holders, are not comfortable doing financial transactions on the phone. They might watch cricket, they might be happy to, look at horoscope, and they might be happy to watch Bollywood songs, but not comfortable doing financial transactions. That's one. So that is something which a gap that needs to be filled up. And if we look at the assisted mode, if the last few years, if you look at the trajectory, the fact that earlier the focus from 2014 was giving accounts to people, over the years, I remember very well, I was part of the National Strategy Committee of PMJDY right from day one, that because we were focused on accounts, but after a few months, we realized accounts is fine. How do we enable access? And thanks to that push, 2.2 million agents exist out there. And thanks to that, during the COVID crisis, 400 million plus transactions are happening on a monthly basis where migrants and anyone could go to any agent of any bank and withdraw their money. So that has improved, but I would still say that the business case, and especially in terms of interoperability, still needs to be resolved. And I'll spend a minute on that. The way that if you go to an ATM of another bank and there is an interchange is about 20 plus rupees, there has been a big debate about what should be the interchange on Aadhaar enabled payment systems. And it's a highly controversial topic. I don't want to go into it here. And if that is sorted, there are enough banks and agent companies who are hungry for business and who will sweep India as well as Bharat to ensure that you can do a very low cost human interface and assisted agent and do everything that you can do at an ATM at a much lower capex and opex.
So before we move forward, would you like to tell us more about, RBI Innovation Hub and its mission in terms of, increasing the access to financial resources and finance credit per se?
Yeah. Thanks, Kathy. So thanks for giving me the opportunity to talk about the Reserve Bank Innovation Hub. As even Nilesh, you and I had never had a chance. I joined about 7 months ago. That's where we started. We are incorporated last year. So as I defined, the mission is to ensure access to suitable, sustainable financial products in a secure, frictionless manner. So, four pillars: suitable, sustainable, frictionless, uh, secure manner. Right? This is how I define my mission statement. But to give more clarity, I talk about three pillars of innovation. First and foremost is a process innovation. That having spent nearly 3 decades in the financial sector in India and globally, our financial sector, whether it is the banking sector or I would say the AMCs themselves, the friction that we see today is still a lot. Whether it is to onboard a customer, I'm sure if you ask the Groww team or ask Nilesh, the onboarding costs are still a challenge. The onboarding number of steps that you need to do to become a customer is still a huge challenge. Aadhar, to some extent, has solved it, but because of Supreme Court judgment, other regulatory issues, is still not fully resolved. That's just one example. So process innovation is the most critical, and my favorite example is: do you know that if you have to, if a farmer in Tamil Nadu or Karnataka has to take a loan, my first-hand research shows that the farmer has to spend 2 to 3 weeks, even sometimes 6 weeks, to be able to get a loan of 100,000 rupees. That's serious friction. So I'm trying to work on how do we reduce that, digitize, do interlinkages to reduce friction for a farmer. And hopefully in a month or two, you will see a pilot going live where the farmer will get a loan in 5 minutes. So that's the India and versus Bharat. That you and I can get instant credit. What about the people? Why do they have to struggle to get a loan, visit 5 times, visit the branch 5 times? So that's a process innovation. Just some examples. Then product innovation. Again, most of the financial sector players have focused on the supply side. That this is what I offer, take it or leave it. A cookie cutter approach to the financial products, including credit products that are offered. So my mission is I want to ensure and work with the financial service providers and fintechs to see how do we tailor financial products which are ideally suitable based on my financial flows. And today with technology, it's not the 20-year, back when the bank manager had to meet me and understand my financial flows. The data all exists. But what is disappointing is the sector has not, innovated enough to develop the right suitable financial products for me. An example is a dairy farmer gives drops milk daily at a cooperative, but does anybody offer a loan which can be repaid on a daily basis? No, it doesn't happen. And the third and most important pillar is policy innovation. So some of these product and process innovations might require policy intervention, proactive policy intervention. Some of them might not require. So looking at how policies will enable innovation and process and product innovation.
Fair enough, sir. Pretty insightful. In terms of the on-ground situation which you've been seeing in terms of financial inclusion. But, as you rightly pointed out, there are a lot of products available in the market, and leading the consumers to these products is, being done through a lot of awareness. Mr. Nilesh Shah has been a part of, AMFI as its past chairman, and we've seen a lot of RBI-led innovative campaigns as well. So, how have these innovative campaigns, brought about a transformation in the financial behavior and the awareness? Mr.
And you
Nilesh
want
Shah,
me
I
to
would
take the
like
stab or
your
Nilesh? Yeah, maybe
sorry.
Nilesh, you will be better. Yeah, please go ahead.
So, Khyati, when we look at the past, we feel reasonably proud of what we have achieved. When I started, SIP was 5 crore in collection. Today it is 11,000 crore in collection. So reasonably, I can pat my back and say, oh, Nilesh, we have done a great job. But when I look at potential, there is nothing but disappointment, disappointment, and disappointment. We have miserably failed the savers of India in reaching out for variety of reasons which Mr. Bansal explained. The innovations have not been encouraged. The entry or onboarding of customer has not happened as frictionless as it should have been done. And in everything we have moved, but the speed at which we should have moved versus speed at which we have moved, there is a big gap. Today, when I see, and this is just pure Google search analysis on collective investment schemes where Indians have lost money. 1.5 crore Indians have lost roughly 1,80,000 crore in collective investment schemes. And half of this won't be reported also. Now, this money we could have easily garnered towards mutual funds, bank deposits, insurance policies. And all these investors who were driven by greed, who were misled, who were uneducated, we could have really created wealth for them. So when I look at past, I feel satisfied with what I have achieved. But when I look at potential, I truly feel disappointed that what we could have done versus what we have done is really, really very low. Now, when I started my career in mutual fund, I was told that in mutual fund, it is always J curve. You have to toil for 25, 30, 40 years to build your credibility. You believe returns will excite people to give money, but that is not true. When you earn their trust and confidence, then people will open their pockets to you. So I just believe that mutual funds will be like bamboo tree. We have toiled hard for 25, 30 years. Hopefully we have built trust and confidence. And like bamboo tree, which just grows out of ground for 5 years, and sixth year it goes and touches sky. Mutual fund and financial services industry will also grow like that.
But then how do you tackle the kitna dete hain, that question which is posed to, because you're not allowed to talk about, returns in the futuristic manner. And it's past performance, which is of course available for investors to reckon.
So there is no one standard solution, Khyati. I think first and foremost is earning trust and confidence. Today, when you go into bank account or a bank deposit, there is a trust and confidence that this banks will pay me my money on maturity. There are n number of instances like PMC Bank where people have not got their money, but the trust and confidence is not shaken. I think the other part of financial industry like mutual fund, insurance, pension fund will have to go to that level of trust and confidence. And trust and confidence is earned over decades. It can't be grown in 1 year or 2 years. Number two, as Mr. Banshal mentioned, we have to create ease of investment. My product, today I'm saying that my SIP has delivered 15% compounded return, but it doesn't appeal to a person. I should be able to market to him saying that if you have a daughter and you want her to be educated, then please save money with me so that on 18th year when she says, Papa, I want to go for a study, you will be able to fund it. My product has to go from supply to demand side. But today I'm not allowed to make those statements under regulations. The third will be onboarding and handholding. Today, proudly I'm saying that my SIPs have delivered 15 to 20% return. But in March 20, my SIPs had delivered negative return for 3 years. For 5 years, it was low single digit return. Imagine myself going to a person who has given me money for 5 years and I say your returns are less than bank deposits. Now, there is a need for someone to handhold him during that tough period so that he can enjoy benefits today. So we need to create a distribution network. And then it is financial education. The best of the person today I have seen in market. I'm not talking about Bharat. I'm not talking about non-finance people. I've seen people in finance industry keeping money in liquid fund or savings account because they want to time equity market, and they lost far more money waiting to time the market than in the correction. Now, how do I give financial education? Can one person do it? Answer is no. It's a combined effort of regulator, manufacturer, distributor, and government. Together, we can move this mentality from physical assets to financial assets. So there will be multiple steps required. A lot of things have been done. We are on right course, no doubt about it. But can we pick up the speed? Answer is undoubtedly yes.
Right. And Mr. Bansali spoke about, Mr. Nilesh Shah spoke about, how everybody has to, join hands in terms of awareness. And we're seeing a lot many, advertisement campaigns and on-ground activities through RBI as well. So have they brought about any transformation in terms of understanding what kinds of, access to credit is available and how to utilize even the government-based schemes?
Yeah. So from an RBI side, I mean, I'm disclaimer is I'm not speaking on behalf of RBI, but being a subsidiary of RBI, I would just like to say that overall, the big campaigns that RBI has run, it has actually created more consumer awareness, whether in terms of how to borrow. And obviously the famous Amitabh Bachchan ad, which I was personally very happy, and I was batting with RBI for years that we should go aggressive on the campaign. It has personal satisfaction. And also the campaign during COVID times on digital payments. See, all of these combined together, including all the players, that is what has led to where we see UPI transactions today. But on the credit side, we do agree that there is still a lot to be done, because there are enough suppliers who try and take the consumer for a ride. As Nilesh mentioned, trust is the most important thing, whether it is mutual funds or it is credit. And unlike mutual funds, credit, everybody thinks I'm getting a loan, what's the big deal? But I don't know when they get into the Goldilocks situation where they are stuck, and a lot of digital lenders have followed a lot of nefarious practices. So I'm hoping that RBI is going to, the committee report has come out, and we'll try and see how to increase transparency in credit growth. But one point I would like to add is, as a part of our work, unless that might be of interest to you as well, I'm building on a trust stack concept. How do we increase trust in the financial system? Because that is the underlying Aadhar, or the foundation of adoption of financial services. And that involves a lot of things, whether it is one layer is frauds, other layer is how do we ensure transparency, third layer is how do we ensure automated dispute resolution in case there is a problem. Because unless we all work together, and I plan to work with SEBI as well as all of you in the industry, to see how we come together as in financial sector, where the consumer, how does it matter to a consumer? It's a bank complaint or a mutual fund complaint. They would want a single interface. So I'm trying to build a UPI kind of a system, conceptualizing it currently, where disputes can be settled like this. Most of the disputes are possible to be settled like this. Thanks. Yeah.
So, so you speak about UPI, and that brings me to another, the Eureka movement that UPI brought into digital payments and connectivity. What could be that moment for, payments and investments, the UPI moment? What could drive that moment?
I suppose that's for Nilesh, investments, or that's for me, Khyati?
Yes, sir, Mr. Nilesh Shah, sir.
Yeah. Nice.
So, Khyati, in my humble opinion, we are cooking birbal ki khichdi. It can't be fast tracked. I cannot win trust and confidence of investors overnight. My technology could be best. My distribution network could be best. I could be offering the best product, but I still have to win trust and confidence. In my own family, my mother wants me to buy gold for my daughter's wedding. Now, I can't go and convince my mother that, Mom, we should be investing in equities. When I made that statement, she said, will your daughter wear share certificate in wedding? I have to overcome my mother's challenges, forget everyone else. First, I have to ensure that in my house, people start believing me. We are trying to change Riti Rivaj, Rudhi Prathi, traditions of thousands of years. I don't think so. This is an overnight journey. all of us will have to keep on toiling for ensuring that Birbal ki khichdi eventually cooks.
I would
But
just
Mr.
like to, sorry, Kathy. Yeah. So, Nilesh, I couldn't agree more. But, I think we are at an inflection point where
Yes.
the Gen Z who are digital natives and they realize that physical assets don't matter as much as virtual assets. I'm not even going to crypto, but even virtual assets like gold ETFs or mutual funds. So, just to add, and I am very, as I think you are, that this decade is where we will see a lot of adoption by the digital natives. Sorry, Kathy, for that.
Yes, sir. Look, it's fair enough that we are talking about digital and mobile transformation in terms of payments, and when we are still stuck in the physical domain in terms of investments. But is it also the cause that, the cause of this issue is it also the reach in terms of brick and mortar presence of offices and banks, or are the common service centers, are they bringing about a revolution in terms of access? Mr. Bansal?
Yeah. So, as I mentioned in the beginning, that there are 2.2 million outlets out there, which actually it is surprising that the investment industry, if I would call it, or mutual fund industry, I have not heard of a lot of distribution taking place through the 2.2 million physical outlets. It's just a small device which we standardize, we call as a micro ATM. So it used to be a POS, with a logged-in operating system. In the last few years, it's largely an Android tablet or a phone. So this agent who gives a cash out of a direct benefit transfer scheme is potentially a person who can sell simple product. I know, Nilesh, there are regulatory challenges that we work in together in industry, as we are saying, a simplified, because otherwise the incentives misalignment can take place. Sell a simple investment product to actually 400 million people whom they serve today. That's the kind of transaction we saw even last month. So that I think is an important point, which where the alignment of the access to whether it's CSCs or business correspondents and the working together of a assisted mode with insurance as well as investment industry will play an important role in this decade.
Sir, also, Mr. Bansal, you spoke about, the problem with onboarding. So, do we see a central KYC, which has, of course, we've seen baby steps in that direction. Do you think that is a hurdle?
Yeah, so central KYC was thought of in 2014, and as of now, it has 400 million uploads and 200 million plus downloads. And it came as an idea. I was working closely with SEBI on the KRA at that point of time. Now there are operational challenges with CKYC, which incidentally we are working on with them as a part of our engagement to see that the ecosystem has brought out some friction points. So we work with them. But I would say, like the KRIs have played out well for the SEBI regulated entities, CKYC can actually make it easier for everyone to ensure that there is seamless onboarding. And just to add, the video KYC that has been allowed itself is a huge game changer with Aadhar as well as video KYC as the way you onboard a customer. We are also trying to work with the industry to see how do you standardize it to take it to scale. So my vision is a billion KYC for a billion users. Electronic KYC did what it did when I architected it, but now take video KYC and CKYC to the next level. So we
Right.
should see a lot of adoption by the industry once some of the friction points are resolved.
Agree, so. And Mr. Nilesh Shah, would you like to add on to this as to, if a single bank KYC would be sufficient to invest in mutual fund, or like a central KYC number, which could be sufficient, how would that transform, SIP numbers that are already growing at, say, 25%?
So, whatever Mr. Bansal is saying is music to our ears. I wish he would have started this 25 years back when I started my journey in mutual fund with the vision which he is laying out, if we had that 25 years back, I certainly would have ensured that the number of investors in mutual funds would have been multiple times than what it is today. Uh, Clearly, buying of gold, where a lot of allocations of our savings have gone, is simple because you just walk into a shop, buy the gold, and come out. There's nothing else required over there. My financial product selling should be as simple as buying of gold. It should be available across the nook and corner of India. It should be available so easily that a person will find it easy to adopt it. It will become part of his or her lifestyle. So we have no option but to work towards this. All the low hanging fruits which were there, probably we have already covered. There will be some more low hanging fruits as the time passes, but we have to change the orbit. It's no longer going from 3 crore to 5 crore investors. I have to go from 3 crore to 30 crore investors. And for that, the vision which Mr. Bansal has laid, we have to execute it on the ground.
Right. So, Mr. Bansal, would you like to add in any final remarks in terms of, how this bridge can be capped? How this gap can be bridged, sorry.
Yeah.
In
No, so
terms
the
of
gap, as you're saying, one is, see, it cannot be done by one regulator alone or one set of participants alone. So I don't want to make it a presentation about RBI. I have a graphic, if you go to a website, how I want to work with the industry, which includes the traditional banks, the new age banks, the fintechs, the other regulators, academia, researchers, and consumer groups to make it happen. So we'll have to all collaborate to make the real vision happen. And honestly, I'm happy that it was on my radar now this month or two to start talking to SEBI. It's good that because of this, I got a chance to talk to Nilesh. So we need to work together. Otherwise, we'll not achieve the desired results.
And of course, offline payments are being kicked in. We have, 500,000 mobile subscribers, but 1 billion mobile holders with feature phones as well.
Yeah.
So, do you think, Mr. Shah, if that is also tapped in through RBIH initiatives, the collaboration would work wonders for the Bharat and India gap to be bridged?
See, undoubtedly, when we are going towards Bharat, it will be a different approach. In India, we can probably get away by speaking English, but in Bharat, we have to speak in native language. Uh, in India, we can get away by using jargons. Uh, but in Bharat, we'll have to talk in native language which they can understand. It has to be jargon free. In India, there is word of mouth publicity. If someone asks me, is your SIP good? I said, just ask your uncle and he'll vouch for it. In Bharat, I may not have that luxury. So how do I bridge that connect? At the end of the day, we'll have to throw many darts on the board. Some will stick, some will fall. Fair enough. There's no shame in experimenting and failing. We will learn from that failure and reinvent the process. Our KYC process has been remodified time and again, but there's nothing wrong in it. So we will have to develop this mentality that all innovations are encouraged. Some will succeed, some will fail. What fails, no shame in it, remodify it and again experiment with it. One day we will have the elixir with which we will cover India and Bharat. We will cover upper middle class, lower middle class, poor class, rich class, and shift them from physical assets to financial assets. We will ensure that Indian savings is invested into India. We will ensure that when companies declare good results in India, the benefit of that is enjoyed in Mumbai, Jaipur, Ahmedabad, Kolkata, Chennai, not only in Singapore and Hong Kong and Tokyo and London.
Right. I'm sure the next decade, we are going to have a different scenario on ground. And thank you for all your insights, Mr. Rajesh Bansal and Mr. Shah. It has been a pleasure to hear out all your views and looking forward to the journey ahead. Thank you, sir. Thank you for joining
Thank you
us.
so much. Thank you so much.
Thank you so much for joining us here today. It was a wonderful, very insightful session. Thank you, Mr. Panchal, Mr. Shah, and Khyati. Wonderfully moderated session. Thank you. And we look forward to having you here again. See you guys.
Thank you, Richa. Bye.
Thank you. Okay, so that was a very, very insightful session. I think we learned a lot about bridging the gap when it comes to India and Bharat, and we are on the right track. And I think we are making the most of technology and already bridging the gap. And there are, I think it was, Bansal sir said that it was great that he talked to Nilesh sir here. So that's how we are bridging the gap through Thrive. And I hope all of you were able to gain certain insights. And if you have just joined in, we have a very, very, very wonderful session coming up for you because our next speaker was amongst one of the most favorite speakers for the second edition of Thrive. And he is obviously back on popular demand. He is a man who believes in how junk can be turned into gold. He has been investing since second year of college and has identified several shares which turned out to be great assets. An MBA graduate from Asian Institute of Management, Manila, his first job was at Citibank. However, he had a drive to understand the capital market and make money from it. And with thought, he founded First Global, where he is currently the managing director, an early investor in Apple and Amazon. He is also a very, very popular face on several business channels. He is a Shairi enthusiast with special interest in Sahir Ludhianvi. Forbes calls him the alchemist of Dalal Street. He is the one and the only Mr. Shankar Sharma. Thank you so much, sir, for joining us again. So exciting to have you back again. We had a fantabulous time with you last Thrive, and we're looking forward to another fabulous session.
Thank
And
you. Thank you for having me back.
thank you. Driving this conversation, we have Mr. Ishan Bansal, co-founder and CFO of Groww, in this session titled, What Would Wealth Creation Look Like in the Next 10 Years? Over to you, Mr. Ishan.
Thanks, Richa, for introducing. Thanks for Shankar sir for joining.
Thank you, Ishan. Nice meeting you again.
Same here, sir. So first of all, I would like to thank you for joining us on Thrive 2022. I still remember the last Thrive when you made waves with your lake of returns theory and everyone loved it. And the topic we will discuss today is all about future in next 10 year, what's going to happen in the market, how will people make money. And I think you are the best person to talk about future and give us insights. You have done it multiple times. Your understanding of the market and data, and you are able to look into the future and tell what's going to happen, will be really interesting to understand from your perspective how next 10 years will look like in stock markets, especially in India. So
Right.
for the first question, I would like to talk about is there are huge change in stock markets today in terms of participants. I remember when we started Groww, there were only 5 million, 50 lakh active investors were there 5 years back in stock markets. Today there are 2.5 crore, 25 million active investors in stock market from a retail perspective. And earlier people used to only talk about FIIs and how much money FIIs are putting in, how much money FIIs are kind of taking out. Now people are talking about SIPs as well, and there are huge amount of money coming in through SIPs, and it's mostly coming through with internet penetration increasing, with financial information access increasing. And how do you see basically retail investors shaping equity markets in the future?
Right. Yeah, Ishan, I mean, it's been last 24 months have been beyond imagination in terms of the change in the money flows into the stock market. Because traditionally, when I started my career in the late 80s and beginning of the 90s, it was only one institution worth the name, which was Unit Trust of India, which was formed in 1964 by an act of parliament to foster the equity and, let's say, the financialization of savings cult. That was the first and at that point the only entity which was pooling savings from lakhs of people and investing in the stock market as well as in the debt markets. And from there to come to this juncture when really it's just like, for me, a whole 30-35 year of perspective, which the world has changed so much, where you have millions, crores of small investors entering the stock market and becoming on like a force in its own right, as opposed to the FPIs, which were opened up in 1991, 92 by Dr. Manmohan Singh's budget, and they started to come from 93, and the whole country would wait every day. Whole stock market would wait every day that how much buying will happen today from the FIs or the FPIs, and the figures were closely watched, tracked. Even people used to predict that they say we're going to get 5 billion or 10 billion or get minus 2 billion. From that to have moved to this level, when we have kind of not all there, but kind of moved away from watching this number closely. Instead of that, we are watching the numbers of the new demat account openings or the new retail investor coming to the market. And for me as an investor and a participant in the stock market, what is heartening is that it was a dream for all of us in the financial markets back then, that we are too dependent on foreign capital for our equity markets, or for that matter, overall financial markets, not even just equity, but debt markets. And how and when will the Indian savings pool start to get diverted towards financial assets? And today, the needle from there has moved so much that I think the aggregate buying power of the money in India, which is investing into the stock market, might well be like 3, 4, 5x of what FPIs can promise in a good year. It's absolutely astonishing, to say the least. And I'm a big votary of this, because I'm biased, because my journey in the stock market back in the early 80s, when I was a teenager in college, was very similar to the journey that a lot of investors in the last 2 years have had. By that, what I mean is that, why did people enter the stock market in the first place in March, April, May of 2020? That is because a catastrophe happened. People were suddenly left locked down in their homes. Many people lost their jobs. I know many people in Dubai, for example, many people got laid off. So whatever savings was, they started to invest, because at least, khana pina to chalega. So from a catastrophe, a huge opportunity was born. And for me, it's very close to my way of thinking, because my father died when I was a teenager, and I had to figure out a way to get rich. And the stock market just came into my life. So I was just sitting and thinking that's exactly the same kind of catastrophe that has happened in the last 2 years, but it has opened up a huge door for people. I think overall, it is just a phenomenal place to be in as a retail investor for the India in today. And I'm thrilled to welcome all of them to this party.
Thank you, sir. I think hopefully this will continue. The biggest challenge, and there's a lot of discussion also going on, with COVID kind of residing, and I think again with Omicron, again things are back to the lockdown days in some sense. But after a month or so, probably things will be better. But उसके बाद आपको क्या लगता है क्या चेंज आने वाला है? Will this sustain for next 5 to 10 years, or will it kind of go to through the cycle of typical
Right.
bull market, and
So
then
last year, or in the last session, I don't know whether, yeah, it was last year, and sometime in 2021 when we interacted last, when I had propounded the lake of returns theory. So this year I want to propound the theory of the river of returns, okay? Or more accurately, the river of liquidity. So river of liquidity is what drives asset prices. We all know that, right? Liquidity is what is the lubricant that drives asset prices. And if you start to think of the source of that river, okay, it is the Gangotri, okay? And the Gangotri is the US. So that is where the water starts. That's where the ice melts. That's where the liquidity stream starts. And the US sits right at Gangotri. So they are the first receivers of the freshest, cleanest water that there is on this planet. It's coming straight from the most elemental sources, which is mountain water, correct? After that, after they have finished drinking, then whatever is left, the liquidity starts to flow downwards from the mountains, and then it comes to the sort of the plains, the Gangetic plain, if you will, and then goes all the way to the eastern part of India, which is Hooghly. And by the time it reaches that part, the water has already been muddied and drunk and contaminated by all kinds of things. And that is really central to the other aspect, apart from the lake of returns, that the river of liquidity theory holds that when liquidity is abundant, the first receiver is the US because that's where the Gangotri is and sits at the mouth. From there, the water starts to flow. When the liquidity is abundant, it continues to flow at good speed throughout people like emerging markets, where India is. I think India is more like in Banaras. India is not at Hooghly. But if you go down to Indonesia and all the frontier markets, you're talking really the eastern part where the water has already receded a lot. This year, you are going to see the Gangotri not give up so much water. We know that. That's been a surprise even to me. I did not think the Fed would really reverse its stance in such a, let's say, aggressive manner, but it has. And in markets, one thing, and whoever is watching this must remember one thing. Please do not end up having fixed views of the future. Okay? That is where everybody gets killed. Because people will always have an ego inside them that, look, I thought this was going to happen. Now things are different. How can I change my view? The point is that we live in a dynamic world. We live in a world that's permanently changing. Things were different 4 months back. Things are different today. If as investors we do not change as per new data, new facts, you are not going to survive long term in the markets. I can guarantee you that. So now something has changed. The river of liquidity is running a little low. What that means is this, that by and large, the riskiest assets in the world, what are those riskiest assets? Startups, venture capital funding, micro cap stocks, okay? Emerging markets, frontier markets. Those are the markets where the liquidity will be very, very poor. The Gangotri will still get the liquidity because that's where it starts. So something has changed in the last 4 months, Ishan, and we must take note of that. What happens in 10 years is a different point altogether. That's a different discussion, and I will talk about that. But this year may not be as smooth as, let's say, the last 2 years we have had. And we must be prepped today. We are still in January, that it may not pan out to be as good as what we probably thought 4 months back.
And what about, again, talking about the retail investors coming in? Will they actually be able to drive liquidity in some sense, right? We earlier, Gangotri was the only source. Probably now there are more sources opening up. And will our retail investors be able to still drive liquidity the way they have been doing for last 2 years?
Yes, you're absolutely. I was about to say that in the second part of my my point, exactly the point, that fortunately for us, and fortunately for another country like China, we have large domestic populations and we have large domestic savings, which then ensures that relative to other emerging markets, we still have other tributaries and streams joining the main flow of liquidity, where of course the US is obviously controlling that through its rate policies and its asset purchases. But it's not that we are dependent solely on that. At least we are blessed and fortunate that we have such a huge pool of domestic liquidity, which has been so far sitting on the sidelines, investing in gold or real estate. Equity was still a very small component. Now that component, as in the preceding session, Nilesh was saying, that has expanded dramatically and it can keep expanding. So there will be a counterbalance to the Gangotri tap being, at least not turned off, but at least moderated. I think the domestic saving part is a genuine long-term shift, and it will provide a big support system to the markets, which were otherwise going to be totally dependent on what the Fed did.
Got it. And interesting चीज एक और हो रही है market में. Now the retail investors or Indian investors in general are started thinking about investing abroad also. So earlier it was all about FIIs investing in India. Now there are people talking about investing outside, and you've been one of those guys who've been doing it for a long time. How do you see this happening for a longer term, or is it like a short-term phenomena for retail investors?
So to be clear, Ishan, first of all, every country Okay, every let's say investors in every country have a home bias. Okay,
Yeah.
that is inevitable because you want to put money into your own markets before you even think of putting money in other markets. So if you look at Japanese investors, most of their money are still within Japan. US investors, most of their money is still in the US. Chinese investors, most of their money is still in China. Indian investors, most of the money is still in India. That is a home bias, and that's accepted, and it's fine, and there's nothing wrong with that. But all I do know in my long journey in investing that there is no one perfect country or stock or industry. There is nothing like that. You need many pockets of perfection. Okay. If you think that you're going to just buy one perfect country or sector or stock, inevitably, that's a sure way to go down to the cleaners. Okay. So international investing is a great idea. It must be done with a lot of expertise. And the only risk here I see is that by the time you are becoming aware in India of what is going to change there, you're already perhaps too late. Okay. So, I remember last year or maybe a year before last, ARC Innovation was, which was run by Kathy Woods, was like the toast of the equity markets worldwide in the US. I'm sure in India, I'm sure in Groww, you would have heard about it. And I would only say this, that you have no idea about the portfolio composition and the risk she's running in that kind of portfolio. Single stock bet like Tesla is disproportionate, plus a lot of illiquid stocks. But nobody would listen, okay, because it was fashionable and it was getting carried by the business media and all that. Today, it has crashed like I think good 40-50%. And every day I see on my notification that it sinks to a new low every day. Now, that is the caveat I must put in global investing, that it is not as simple as people have thought it to be. The global tide was good in the last 2 years. It may not be good this year. If you look at a lot of tech stocks, many of them are down 50-70%. So, with all those caveats, I still believe and firmly believe as investors, you need to have exposures to global equities. Go with people who know this inside out. Just don't try to do it on your own. I mean, that's my simple advice. Of course, people will disregard any sensible advice because, we have a lot of confidence, especially your clients and investors will have a lot of confidence that they can do it. Many of them can. And I'm saying, broadly speaking, take expert guidance and advice, but by all means do it.
I think there is another way of actually managing it, is which is index funds and ETFs, which actually provides you kind of a broad-based exposure. And if you are just diversifying, probably in foreign markets as well, there are ETFs available in India, which is very easy to kind of buy and kind of diversify through them. What do you think about in general the passive products like index funds and ETFs? Do you think they will be bigger in future, or they will be kind of still in this in early stage in next 5 to 10 years as well?
So I want to just take like a couple of minutes here, Ishan, and explain what index funds or what explains the rise of index funds in the US. And it's very important to understand this. And by the way, the US is a disproportionately successful market for ETFs, but they have not been successful in other parts of the world.
Yeah.
So if you look at the data for, let's say, UK or Europe, index funds are, hardly 5, 7, 8%. Or let's say passive products, not just index funds. So index is very limiting, but passive investing, there can be sector, thematics, all kinds of things are there. Passive is hardly 7, 8% in the UK, 7, 8% in let's say continental Europe. Asia is very nascent too. But in the US, it's like 40-45%. Almost half of all equity assets are now in passive. What explains this difference? And I've done a lot of work in this. And the main reason is not what we think it is, that it's a low cost way of accessing it. That was not the main reason. The main reason is that there is a huge tax break given if you come via ETFs, okay, versus coming through a mutual fund in the US. And it's like a huge one, like I think it's like 20% or something. So that tax advantage has driven money away from mutual funds into ETFs. So people think it's just a low cost, but the real reason is actually a huge tax break. Now, unless we think in India we are going to incentivize investors to come through the ETF route, by offering them a lot of tax breaks, I do not think it's going to be as big a. Of course, from where it is, it will grow. There's no doubt about it. But to make a case that it will become 40-50%, I really don't think in the next several years that's going to happen, because elsewhere it's not happened either, barring the US. So important to understand that. But I always say this, that look, the deeper, broader a market, as investors, please give them choices. Okay,
Yeah.
may not be perfect choices, but at least I, as an investor, should have choices to do an index fund or a passive fund or a thematic fund. It's my option whether they work or not. I think
Yeah.
maturity of a market means the plethora of investment products. We should encourage it without any doubt.
Got it. This is very interesting. Actually, I never knew that tax breaks are so big in ETFs. It feels like ELSS of India. So the way I think ELSS in India, the similar way probably US is promoting ETFs under a ELSS scheme, where customer is able to save tax effectively by investing through ETFs instead of investing through active mutual fund.
In
Very
fact,
interesting.
the other thing also is that many mutual funds are converting in the US, many mutual funds are converting their schemes to ETF.
Yeah.
Okay.
So which
And the reason
gives
for
him
that
a same
is
benefit.
the tax break.
Yeah. Got it. Interesting. So I think you talked about Tesla as well in between when you were talking about ARC. Uh, we are looking at a lot of focus on EVs, not only in US but now in India as well. There are a lot of startups coming in. There are a lot of traditional companies also entering into EVs. How do you see this EV market kind of becoming a wealth creator in the future?
I think, I mean, I've been in India last 1.5 months. I've been there for, I think, 2 or 3 weeks. And every company has got an EV play. And I tweeted about it also that, I mean, the whole pura desh hi khel raha hai EV. So, matlab ki, in fact, somebody told me a jewelry company has got an EV division in which they're raising some money. And I said, I mean, a jewelry company getting into EV. And that's why I tweeted that, I'm going to buy two companies which are making, tires and seats for EV vehicles.
Yeah, I saw your tweet.
So many people thought I was serious, and I got so many messages even on WhatsApp. Sophisticated investors saying, "How come you never told us this?" I said, "Are you out of your mind? Seats are seats, whether EV or not EV. It's just a joke on how everybody is hopping onto this bandwagon, and
Yeah.
especially the auto ancillaries, because auto ancillaries have been in a big spot of bother for the last few years because the market on the vehicle side got saturated. So many of them had rediscovered themselves as EV ancillaries, EV plays, or stuff like that. I think it's very early days. Let me not make any definitive conclusions. Obviously, again, like ETFs, it's a very small part of the overall auto market. As far as I know, there are only two companies who make EV vehicles in India, at least in the marketplace, which is MG and Tata Motors. There will be more. I'm talking the passenger vehicle segment. Of course, in scooters, there are some more. I think that segment will grow. Now, whether you will make money buying X stock or Y stock, I do not know. But I can tell you only one thing. The way I approached investing in the 90s, when there were two big secular trends that we spotted, okay, back in the 90s. One was Indian IT, okay, which was in the mid 90s, very nascent. Infosys listed in 93. I think the turnover was on 2 crore rupees or something like that. Okay, it was a tiny little company. But obviously, all of us back then saw that this was going to be a decent opportunity. We had no idea they would become such big companies, but it was a decent opportunity. But whether you're going to buy Infosys, Satyam, or Wipro, or a couple of other companies, we had no idea. So what did we do? We went and bought 5 or 10 of these companies. We took a sector and a portfolio approach rather than wasting time figuring out whether Nandan Nilekani was better than Azim Premji. We had no idea. Okay, today they are iconic. Back then they were still untried and untested, right? So why take that micro a bet? Buy the whole sector, buy 10% in 10 stocks. Somebody will win it big time because the sector is good. And the same thing was with auto ancillaries in the 90s. Because of the big auto boom, many of them came in. We had no idea which promoter was good, which promoter was a thief. Went and bought 10 companies. Out of that, you were rewarded with multi-baggers, at least in 3 or 4, 2 or 3 were average, 2 or 3 were terrible. That's exactly the approach you need to take today in EVs. There are many stories, there are many companies. I have no clue who will deliver, who will not deliver. So the approach to take is that buy a group of them, and you are in a good space. But which is going to be the winner, you have no idea. So take a portfolio approach. Don't waste too much time in company X versus Y versus Z. That's not going to. It's too early to make those decisions. That who is going to be the winner in this. Okay, we will see.
So basically, what you're advising is probably 5 to 10 companies, the way IT was done in 90s. If we can
Yes.
take a similar EV bet, there is a probability that people will make money over a longer period of time, because there is a secular trend of EV going on, and might happen, if not in next 2 to 3 years, probably in 5 to 10 years, it will definitely happen.
Correct.
Interesting. And
Exactly.
another sector which is getting a lot of focus these days is pharma and healthcare. I was reading that somewhere in China today, probably the highest VC investment is going into healthcare and pharma, and which is very different from compared to India and US. But in India also, there is a lot of focus now started happening on health in general. Probably COVID is one of the big reason that has kind of put focus on healthcare in India. What do you think about this sector in next decade?
I think, Ishan, all these sectors are so underpenetrated in India. There is only one journey, and which is up. And I say this not only today, but in class 8th, in our geography class, I remember they had given, and this I'm talking in 1976 or 77, there was a chapter in that, number of bicycles per million customer, people, of number of watches, number of, radios, number, and in everything, India was right at the bottom, and US was like, maybe 100 times. And I came back and asked my dad that, I mean, we are nowhere. He said, but that's your opportunity, right? I mean, we are like some decimal place in per capita cement, per capita steel, or watches or bikes. But actually, that was so right. We were so small, and in all those areas, that we could keep growing for 30 years and still not have reached anywhere. So whether you take health insurance or penetration of healthcare services, we are literally at the foothills. This trend can only accelerate. But again, with the caveat, let's say you take hospitals. There are many listed hospitals, many in the pipeline to get listed. How do you know who's going to make it and who's not going to make it? So the way to approach any emerging sector is not to waste time looking at individual companies. मुझे कुछ नहीं मालूम है बॉस किस कंपनी का promoter अच्छा है बुरा है. If I start looking at every sector in that much detail, then I'm not going to have my party on the yacht like I did last night, because then I'll be just meeting companies 24 hours a day, 7 days a week. I want to enjoy the money I'm making. So therefore, the whole trick in investing is simplify the process. Don't complicate it. If your sector bet is good and you've done the data, broad thematics are good, buy 5 or 10 of them. Don't get into the micros of it. You will then build economy of scale in your investing processes.
Interesting. And what do you think about the tech companies? There are kind of quite a few of them listed in last couple of quarters, and some of them have made a lot of money for people. At the same time, there are companies where people have lost money even in the IPO itself. Do you see this trend kind of extending in next couple of years as well, where a lot of these tech companies will exit through IPOs? Or do you think this is going to be difficult considering the current change in liquidity situations as well?
So I think, I mean, there are a few, and I want to take a bit of time over this, because this is really a hot and a raging topic. And it's important for retail investors, I'm sure many are listening in, to understand what this whole thing is. First of all the new listings, or most of the new listings globally in the last 12 months have been disasters. Absolute disasters. And in fact, I've written an article for a national daily. Hopefully, it will get published in the coming week, where I have listed down some of those high-flying stocks which listed in less last 12, 24, even 36 months. And many of them are down like 50, 70, 80, 90%. And they were storied companies. They were hot companies. VCs had funded in billions of dollars. They're listed at, with decent reception, and they're just completely crashed out. And you know why that has happened? That is because ultimately valuation matters. Remember that. I have come across many people who say that you guys are too old and you guys don't understand the way to value these companies. And I only tell them that I've heard this story in 99, 2000. I'm hearing it in 2020. I'm hearing in 2022. Trust me, I know a bit about tech investing. Okay, the most of my money has been made investing in stocks like Amazon or in Apple or in Shopify or in Netflix, where fortunately by God's grace I luckily managed to spot the opportunity. So I'm not a 90-year-old guy who has no clue how this works. Okay, I mean, I know what the dynamics are. I know how to value them. I also know when they are crazily overvalued. In my view, we have forgotten all logic and rationale and senses in valuing these companies. Okay, and that is the reality. That whether they have made money for you or not made money for you, the fact is that their valuations are completely nuts. They are completely bonkers. And while we may ignore valuation norms, ultimately they exist. Every company in the world has to fall back in line with valuation. If you look at Microsoft or Facebook, or you look at Apple, or you look at Amazon, they have traded at these levels because of valuation. They have not been, cash guzzling, hungry companies permanently out there raising money. No, sorry, boss. That's not the way these companies have become great. They are genuinely great companies because the valuation support, barring the first few years, I can get that. Barring the first few years, they have always been very, very reasonably valued. I mean, Facebook today, if you see, is extremely reasonably valued. Microsoft is cheap. Okay, Apple is super cheap. I mean, I think it's what, like, mid-teens multiples. Those are the kinds of things that prevent stocks from falling 50%. Our companies that have listed here are, in all fairness, in my view, completely grossly overvalued. They can fall 50% and 50% and 50% and 50%, which means they can compound on the way down, which I call reverse compounders. Okay, which is the term I invented in 99, 2000, because I saw so many stocks are crazily valued. I said, boss, these can keep halving for every level and still not be cheap. And that's exactly what happened. I'm not saying they will fall 99%, but definitely I think the room is more on the downside than on the upside for a lot of these companies. And the other thing is that these are very susceptible to liquidity changes. Okay. Yeah. That is the other very important thing, that if the Gangotri starts to dry down a bit, the biggest hit are in two segments, or let's say three segments. On a broad basis, frontier markets, riskiest assets. Second, micro caps in India. You can see the kind of 900 upper circuits every day in the micro cap segment. That's absolutely bonkers. And then you have new age tech listings. Again, none of these have great fundamentals, or at least valuation fundamentals. They are most susceptible in a liquidity tap turning down. So I am of the view, if you're a VC, it's a great time to exit. If you're a retail investor, I would really advise staying away from the new age IPOs for sure.
I think probably it's all about profitability as well, because until unless some of these companies are generating cash, it's very difficult to sustain in a market when markets are not doing well. Because if you are generating cash, you can stay without liquidity as well. But if you are dependent on liquidity for kind of cash to run the business, then probably it's actually a double-edged sword of kind of getting valuation, and then without valuation, you don't have money as well.
Ishan, I'll give you a quick perspective. Okay, it's very important. So Amazon listed in 1997. By 2001, it was close to bankruptcy. Okay, and that's when I fortunately ended up buying it, I think, at $14, $15. Now, that's not the point. The point is, it would have gone bankrupt afterwards, after I'd bought it. Still, because it was in still dire straits, even though it had just started to turn free cash positive. That was the trigger based on which we bought. Okay, when the 10Qs came out, we saw that they had turned cash positive, even though there was a loss at the bottom line. On a cash basis, they were already more than cash break even. So even Amazon did not become Amazon while burning cash consistently for decades. It was burning profit, but not cash. There's a very, very big difference between cash and profit. Profit, you can have negative profits, okay, there's no problem. As long as you have generative capabilities on cash, you will survive a downturn. So Amazon survived because it was generating cash, even though at the P&L level there was a loss. People forget that fact. They say Amazon made losses for a long time. I'm sorry, it made losses on the books, but it was cash positive from 2001 onwards. That's why it survived the brutal tech meltdown. Our companies, they're burning cash. They need access to capital permanently. If the market falls, for example, markets are market, they can fall. The liquidity tap will dry up first for the most overvalued end of the market. And I can tell you one more thing, Ishan. The most fickle thing in investing is sentiment. Between Friday and Monday, things can change dramatically. Dramatically.
Yeah.
So a lot of the new investors not experience that. All I can share is some perspective that you might call me an old fogey, but trust me, those things when we forget it the most will come back and haunt us the most also.
Yeah, I think I still remember my professor in college used to talk about that revenue is like vanity, profit is like sanity, and cash is actually the reality. So
Yeah.
effectively, cash in the end is the king, right? We effectively, without cash, you can't grow. And if you are not growing, you can't get good valuations. And that's where kind of this liquidity also becomes important. I think just changing the topic on another risky asset, we are talking about two or three of them, but there is another big one that a lot of kind of talks is going on is around crypto. How is crypto today? Because I think that impact of liquidity on crypto is probably going to be one of the largest, because that's probably one of the most risky asset already in the market. But what do you think, this short-term liquidity crunch will it kill crypto, or do you think crypto is there for here for longer term, and will it survive Indian government's regulations as well?
And I mean, to answer the first question, I think it's here for good. It's not going to go away. I think it is very, very mainstream. Governments can try and control it all they want, but I think it is just now a great parallel system of of exchange and a store of value. And I don't want to say this, but the fact of the matter is that gold in India has been used as a means of concealing black money. I mean, we all know that, right? Gold and real estate have been big stores of value, not just because they're stores of value, but because they offer an alternate means of concealing black money. And that is exactly the same quality that crypto has. So, which is even more easy to manage. I mean, gold and real estate are physical assets, and you can get caught, you can get tracked and traced. But crypto is out there. I mean, so in my view, that is itself of great value. The world will find ways to propagate crypto because it offers this value. Why do you think tax havens survive? Okay, because the world's rich don't want to pay taxes. I mean, as simple as that. Nobody wants to pay taxes. Okay, so crypto is another way in which you can evade taxes or avoid taxes for the world rich or even the not so rich in a very, very efficient manner. So I think the case for crypto, forget about a store of value. I think it's merely a store of concealing income. And I think that's, and I don't want to be moralistic about it. Okay, that's the way the world is. My job is to read the world. I speak to many people, and so many payments now happen through crypto instead of going through the banking channels or the normal cash transfers or the bank wires. So therefore, it's here to stay. There's a temporary downturn. We all know that Bitcoin is down. But I just think it's a great asset class. And again, as investors, you need to have some exposure legally. However you manage it, that's a different issue. The Indian government and the central bank, obviously no central bank likes it. I mean, let's accept it. They all hate it. China hates it, US hates it, India hates it. They will find ways to curb it. But I just think it's a force of nature. It has escaped. The genie's out of the bottle. You will shut down one thing, five other things will crop up. So I just think it's a huge force, and more power to it.
And what about the products which are built on crypto, like NFTs, metaverse, or in general also the backend technology which everyone likes? forget about even the people, but it's even the governments like the blockchain technology. How do you see these things kind of cropping up or becoming mainstream over a period of time? I think crypto assets or currencies are already kind of mainstream. Like you talked about, there are tens of millions of customers in India also kind of buying and selling. But what about other products of crypto like NFT, metaverse?
So I think the metaverse is I mean actually all of them are very bizarre. And we still need to understand all of this, that how come in a virtual world you're buying, selling crazy amounts with real money. I mean, I still need to get there in terms of my understanding. I must confess I'm struggling with it. But I will understand it because my approach to investing or in general understanding is that I always want to be a good student and I never want to become the professor. I want to remain a great student because there are newer courses happening all the time, and I want to be right on the trend. So Web3 or NFTs or metaverse are all new things, but I need to learn them and understand them rather than many of my fellow investors diss them. I don't think I'm going to be the guy dissing them. That's not my nature. I want to keep an open mind, and there might be opportunities here which we are not able to see. So I think metaverse is massive. Many companies, I mean, I was talking to one brand consultant, and she told me that that's a great place for brands to go out and stake out their little areas because still untenanted. I imagine that's a different universe literally. So NFTs, again, a lot of it is nonsense, but there is some value at the it's like art, right? That art is all in my view a big scam, but there is some good art, and most of it is bad art. The NFTs are similar. All of this still needs a lot of understanding, but I want to have an open mind and keep learning from these things for sure.
Interesting. So I think we have talked about a lot on what's gonna change in the future. What do you think in next 10 years will remain same? Nothing, which will not change?
What will not change are basic commonsensical rules of investing. Okay. And while all the manias around, there will always be a bubble, there will always be mania. I mean, let's accept it's part and parcel of investing. But in all those bubbles and all those manias, simple rules of investing should not be forgotten. And those rules are that never have over concentrated risk. That is really the key. Most people will lose out in markets because of that factor, that one big factor, right? That you put all your eggs in one or two baskets. And second, that broadly speaking, valuation still matters. You can, I play everything. Okay, it's not that I'm such a prim and proper guy that who will say, okay, if the P is above 15, I will not buy it. No, I'm sorry. I bought 500 P. I bought loss-making companies. I've done all that, and I continue to do all that. But at the back of my mind, I know the game I'm playing. So understand the game you're playing. Don't start believing in everything you're playing. So I always say this, that play everything, but believe nothing. So that's the way I approach investing, and those are universal laws. I've not made them. So those are things. Valuations matter, will continue to matter, and remain diversified. Don't get over concentrated.
And do you think in 2030, if we look at stock market, where will the stock market be? Will it be the biggest kind of compounding or wealth generator for us?
I'll tell you the reason why I left my job in Citi and came into the stock market as a flow trader. 1988 or 89, I was sitting there and talking to my colleagues in Citi, and who are now obviously in various mutual funds and all that. And the one call I made was that, look, we are at the foothills of a huge growth in Indian equity markets. And I'm not going to get rich working for Citibank. I'm going to be getting rich working on the floor of the Bombay Stock Exchange. That thesis still holds. We are still at the foothills of a giant bull market in India because, like I said, in everything, the headroom for growth is so much. You name the industry, and the headroom is massive. There's only one way to go, and which is up. Barring there will be, little sort of ups and downs in the middle. And if you are prudent and risk averse, you will be able to ride them out. But otherwise, from today till 2030, I think it's just a massive bull run ahead of us.
And I think there will be a combination of multiple assets also, right? For example, equities is one, and another talk about crypto. I think those looks like another asset classes which might emerge. Do you think any other asset classes which we are still kind of missing, which will kind of become big in India?
So I think fixed income itself or structured products in India are still very nascent. I think over time you will if regulation. I think India is very tightly regulated market. That's the other. You can call it a problem or a solution, but I think over time those are separate asset classes built on existing asset classes, which will come in where you can come up with very interesting structured products which give investors decent returns with downside, minimization and stuff like that. So when you do equity, you do bonds, you do, physical assets like gold and real estate, structured assets will also become a very big part. It's just that the regulations don't allow a lot of that. But I think over time, regulators will also understand that you shouldn't put absolute hard barriers to innovation, make them regulated, but allow innovation. And I think our regulators are very good at recognizing the trend. So I think that will be another big area.
Interesting. I think another thing that I was thinking about was today markets are kind of so much dependent on liquidity. We talked about it earlier also. That liquidity dependency, do you think will over a period of time change? Today it's changing from FIs to a bit on retail investor. Will there be a third force in the market that will come?
In my view, the retail itself, Ishan, is huge. I mean, if you think about it, I don't know what the data is, 3, 4 crore new investors or 5 crore, something like that. If you're talking even 50,000 rupees on the average into the market, I mean, you're talking 2.5 lakh crores. And that's what, I mean, that's like 30, 40 billion dollars. I mean, those kinds of numbers on a aggregate basis are staggering. They may not be big individually, but I tell company that I meet that stop chasing the FPI as your shareholder. Okay, start chasing retail as your shareholder. Build large communities. Go out and communicate directly with the retail guy. It's literally a force multiplier if you have communities built for your company or your industry in which you can communicate. And today technology allows you to bypass intermediaries like brokers and analysts and speak directly to the end investor. Imagine the power at your disposal if you're a good company. So in my view, that itself is a huge game changing phenomenon, that aggregate buying power of these. And by the way, these are not going to buy HDFC Bank and Hindustan Lever. They are going to be buying attractive early stage companies. Okay. Now, if you're owner of an early stage company, imagine the power of that reach. So just cultivate and build huge communities of retail investors, which will be far more sticky and stable as compared to portfolio investors, or let's say FPIs or even domestic financial institutions. People don't understand the power of this just yet. They will.
Interesting. I think there was another area which somebody was telling me about was algo trading. I think there is a lot of discussions going on from a regulation perspective also. How's algo trading will work in India? Will it ever become a product for retail investor, or will it be only be accessible to say a hedge fund or a HNIs? So what do you think about algo trading's future in India?
I am very optimistic about algo trading, the future of it in India, without any doubt. It's just a great way for, let's say, less sophisticated investors to participate. And of course, there are all kinds of algos out there, good, bad, ugly. Over time, the market should filter out and will filter out the good from the bad. I think regulators should not clamp down on it. They should regulate it. Again, I'm all for regulation rather than bans. Because when you ban something, then you push it into the gray areas, right? It will exist. Hard line bans don't work. Bring them in, make regulation and wider rather than make it so narrow that everybody else then falls. It's like if you prevent, if you ban liquor, are you saying that people will stop drinking? No, but then it will go away from mainstream into into the illegal hooch dens, and then you will have people consuming all kinds of spurious products and dangerous products. Regulate it. So all of this is ultimately good if you regulate it. I think regulator is obviously talking about it. SEBI is. I'm all for it, but I think the future for algo trading is phenomenal. I think it's just another huge growth area.
And how do you see it retail participating in it?
I think retail is already participating in it. I mean, and I think that will just keep growing because the statistics are very poor for retail investors in trading to make money. We know the data; it's like hardly minuscule percentage will make money, and that is a fact. Even professional investors struggle. So if you get some good algos which are time tested and actually not back tested but real time tested, there will be only a handful. It's not that simple. I think creating that itself another journey with a lot of tech involved in it. But if somebody can crack that code, I think the market is absolutely there and ready for it.
Interesting. I think this brings to an end of our session. Thanks, Shankar sir, for taking out the time. And I think I would like to just have last word from you on your theory on river of returns. I think we talked about last time a lot on river of liquidity and lake of returns. So I think let's talk about in last few kind of minutes about uh, your river of liquidity for people to kind of appreciate the liquidity that we talked about from Gangotri to even the subsidiaries that comes from India. I think it'll be very interesting to kind of end the session with that note.
Sure. So, the lake of returns theory is that the markets are like a giant reservoir. And when lake returns fall to very low level, then water starts to come in, like you have in a dam when there is a dry patch. And usually that will then take the water up. You will not have a bear market till you hit the overflow level. Okay, so view markets like a giant reservoir in which the returns can go down or the returns can overflow. And you will judge that overflow or the down based on preceding year data. But of course, that is a larger discussion. But this year, I'm putting out my concept of the river of liquidity, which is the world gets driven by liquidity. Liquidity gets created largely in the United States of America, which gets the freshest water right at the source. That gets its all fill from there. Only after it finished drinking that the water starts to percolate down to the middle plains and the Gangetic plain and the Varanasis and all that. By that time, the water is already a little dirty. The speed of water has already slowed down a bit. By the time it reaches the Hooghly, the water is extremely poor quality. And the Hooghlys of the world are typically speaking the frontier markets, right? We sit at Varanasi more or less as India. But the good thing is that we have an interlinking of rivers project, going on in which it's not only the Gangotri from the US that will drive our liquidity. This retail investor phenomenon that I spoke about is adding to clean water coming into the so-called not so clean water on the ghats of our of Banaras, and that itself is our big edge as India because of huge population, massive savings. I think for us, the liquidity stream from Varanasi gets better, unlike for many other countries.
Thank you, sir, for giving us a new theory this time, river of liquidity. Uh, I think I'll pass it on to Richa for kind of taking it over now.
Yes, thank you. As always, wonderful session. Everyone thoroughly enjoyed it. I think you have a big, big fan following again in the comment section, sir. So you can definitely go ahead and view that. But thank you again for accepting our invitation and being here. It's always wonderful to have you. And thank you, Ishan, for moderating this session. And without wasting any more time, let's move on to the next session. This session was definitely fun and informative. And I don't know if it's just me, but we definitely hold a special place in our hearts for teachers who make things fun and exciting while you also learn from it. And I think Shankar sir definitely is added to that list for me. Um, okay, so now let's move on to our next speaker. Our next speaker did her Bachelor of Engineering in Computer Science from University of Pennsylvania and went on to complete her MBA from the Wharton School. She started her career at Goldman Sachs and then she worked as a product manager at EasyTap Mobile Solutions and Square. She also chaired the Wharton Indian Economic Forum. She was the founder and network leader at Lean in Bangalore and also a shaper at Global Shapers Community in Bangalore. She is currently the co founder and CEO of Basis, a one of its kind financial platform designed to simplify finances for the modern Indian women. She is none other than Hina Mehta. Thank you so much for joining us today. And this session, titled Financial Education and Its Importance in Making Investing Accessible Across India, will be moderated again by Khyati, a distinguished freelance journalist. Welcome back, Khyati. Over to you.
Thank you, Richa. Thanks for introducing me and Hina. Hina, a very warm welcome to Thrive. It's a pleasure to have you here. And, a woman to woman talk about women in education, financial education. So, as we see the budget document of India, we would reckon that 6.43 lakh crores are spent on education per se, but a very minuscule amount is, diverted towards financial literacy in the country. So, since you have been a part of Basis, which interacts with many women across India, please tell us how the lack of financial awareness is impacting women.
Absolutely. And thank you so much for having me here. Very, very excited about our chat, Kathy. And yeah, jumping right into your question, right? Lack of financial awareness amongst women affects us tremendously, right? So we can start by looking at the life of a woman, right? Just generally looking at stats. Women tend to live longer than men, right? There's what we call the gender pay gap, where we earn less for similar jobs that we do as men. And to top it up, it also costs more to be a woman, right? If you're looking at healthcare costs, personal care costs, the pink tax is something that's getting more popular as people are talking about it. So essentially, as women, we earn less, we need that money to last us longer, and we're paying more just to just to survive as women in this market. So money management, investing, growing wealth, protecting wealth, etc., is all the more important for women. Lack of financial awareness, at Basis, we often use this acronym of 4Ds, right? So these are these dire life situations, which the 4Ds are divorce, debt, as in loans, debt, death of a spouse, and disaster, right? Like these 4Ds tend to disproportionately impact women more so than they do with men, right? And a disaster is something we saw play out real time in the last couple of years. So yes, all the more reason women need to be more financially aware. Studies have shown that 9 out of 10 women at some point in our lives will have to manage our money on our own, right? So it's important, it's critical to start as early as possible and really take control, take charge of our money as women today.
Right. So, it's been said a lot that apart from pepper sprays and defense techniques, a little money of their own helps women, protect themselves way better. So,
Absolutely.
do you think there are a lot of these educational initiatives being conducted by both manufacturers, regulators, and the government through its Investor Education Fund? So, how have they panned out, and are they bringing about any transformation?
I think absolutely yes. It's incredible to see the focus on investor awareness initiatives, both by regulators as well as other bodies in the industry, right? Every AMC has an investor education budget that needs to get utilized. We see focus from bodies such as AMFI. The NSC is doing so much in terms of driving education. So I think we're moving in the right direction. There's still a lot more that can be done, of course. We are obviously living in the age where content distribution has never been easier, right? In a matter of seconds, you have massive reach and scale. And I think we're really at the tip of the iceberg in terms of what more can be done with various initiatives from various players in the ecosystem. And so it's a really exciting time to be part of this, and excited for what the future will bring.
So, Hina, talking about content, as you said, there's a lot of educational content, but financial documents and jargon, if you see, they are so intimidating. I mean, we are talking about not just interest rates, but complicated terms and clauses where you have to sign about 20 odd times before opening a demat account, and there are 30 odd signatures needed for a loan document. So, do you think these are really intimidating women in India?
I think, yes. I mean, it's intimidating for anyone, right? Financial jargon, documentation, understanding products out there in the market, how they work, etc., can be scary and daunting for anyone who's coming into it, as a newbie investor, for instance. But yes, absolutely. For women, what tends to happen is social conditioning tells us that we don't need to worry about it. And men also tend to talk more about these things, in a more social context, right? So women talk less about money, have this social conditioning from a very young age that, tells us that money is not something we need to worry about, right? In fact, I'm not sure if you saw a Paytm sort of brand campaign last year on Women's Day, where they done this social experiment where they had men and women asking women same questions, right? You file your own income tax returns, you take investment decisions for your family, right? Understanding financial documents. And we just saw how in that social experiment, the gap between men and women was so massive. So absolutely, it is scary. There is a lack of confidence, lack of knowledge, lack of trust. That impacts women, again, more so than they do with men. But this problem isn't restricted by gender, of course.
Yeah, the patriarchal fabric of the society sort of makes it even more difficult for them.
Right,
But
absolutely, right. If there's men controlling what, various decisions in our life, then that does, and money is again an enabler for almost everything we need. So definitely patriarchy affects all of this. But on a more positive note, we see that changing, and so that's promising.
so, financial advisors, they often talk about, they insist on getting their partner together for the financial planning sessions. And there is, some bit of movement that we see in terms of more
Right.
women earning and bringing the paycheck back home. But
Yeah.
are these funds actually being invested?
So, on your point about financial advisor, financial planning, amongst families, we've actually heard stories where there's inherent bias even in that, those settings where advisors again tend to speak to the men, right? Women may have different approaches to managing money. In a lot of cases, I mean, there are lots of studies done on how women make better investors than men, for instance, right? So there are these inherent biases that play out in some of those settings as well. But sorry, I missed the second part of the question, Kathy.
So, when they get the paycheck back home, are we
Right.
seeing any investments through these paychecks, or they're just being, stashed under the pillow?
So yeah, I think historically, yeah, women have tended to stick to more familiar places to park money, which are fixed deposits and gold, right? In fact, Indian women are known to have about 11% of the world's gold is with Indian women. But in fact, there was an article in today's Economic Times itself, front page, right, which talks about how just in the last year or two, the number of women investors that are coming into the capital markets have increased. And I think that again is a very promising sign. As with a lot of these trends happening in the industry, we are just scratching the surface. But trends and some of the more recent stats are super promising. And so again, paychecks are coming back home, may have been parked in the lower risk, safer asset classes, or asset classes that women were generally more familiar with. But we are seeing a movement into asset classes like stocks, mutual funds, and now crypto, which is another hot new asset class that is again getting very popular with some of the younger population as well.
Right, crypto, of course, and there are a lot of learnings there. I have heard that through basis, whatever women learn, they can share with fellow women investors who also get a customized plan. So, tell us more about this whole movement and how it has helped transform this page.
Yes, I can talk about this all day, right? So at Basis, our approach has been, so obviously the gaps we saw in the market were knowledge, trust, confidence gaps, right, amongst women. Women actually represent the single largest underserved market that there is within the financial ecosystem, and that's where we saw the opportunity, not only from an impact standpoint, but it's also just a massive business opportunity, right? Um, and we adopted this community-driven education as step one, right? So it's not just about educating, these urban millennial and Gen Z women. It's also about having that social proof, right? When a single woman on our community hears about how another single woman or a recently separated woman handled her money, it gives her the confidence that she can do it, right? We have, just similar to that, we have a number of different very, very exciting stories that have come out from our community. And so just having that social community-based adoption of financial services, education, highly contextual information as well, right? So information, there's no lack of it today, right? Anyone can Google what a stock is, but how does it tie in with your goals, right? Does it make sense for you to invest in it, right? What are the things you may need to look at based on your financial goals and objectives? And so we've adopted that approach from the beginning versus just diving straight into, let's say, the transactional layer, or just having education on our platform without any context, really, because there's plenty of that. But for whatever reason, this content, this education still hasn't been able to really target women in the way that it's supposed to. I'm sure and every year we see this in March, during Women's Day, International Women's History Month, various platforms will start talking about, why women aren't investing, et cetera, and that conversation just dies right after that month. And separately too, a lot of companies, a lot of platforms see this problem as a marketing problem, right? Or we'll just market more to women, and that should, solve for these issues. But the problems and the gaps run much deeper than that, and that's what we're focused on at Basis with this community-driven education as step one. That obviously needs to lead to action, right? So we're building our platform, we're designing it so that women take action, make their first investment, ensure they get the right amount of health insurance they may need, or life insurance. Access to credit is another massive market where, again, the penetration amongst women customers increasing, but still minuscule, right, compared to what it may be amongst the other genders. So that's what we're excited about. That's the approach we took, and we've been very, very excited to see the traction we've had so far.
So, at this point, would you like to tell us about any particular anecdote or, live example of any woman who, saw that she had to step in, look at her finances, and then she learned about it? How did she bring about a change?
Yes, again, so many different anecdotes, and I'm trying to pick some of the really good high impact ones, right? So one of my favorite ones, in fact, one that had an impact on me specifically, was again about this young woman, a 25-year-old working in tech. She talked about how her father had a heart attack, and all of a sudden, and she's an only child, she had to figure out what a will meant and how that's structured, and what we really needed to do as part of wills. And she shared her entire experience, right? That was eye-opening for me. I haven't had that conversation in my family yet. So that's one example where, again, the community element, again, information at the right time in a very specific context really helps, right? We've had, I think the single women category is another, and it's growing, right? India currently has its largest number of single women ever in our history, which means, these women are looking for that control and autonomy over their money. And, we hear a lot from this segment where, let's say a newly separated woman who may have had all her money parked in FDs suddenly has to figure out how to grow her wealth, and shares those experiences. We have women who are saving up for a master's degree, right? I was in that camp. I went for my MBA a few years after post some work experience, and I didn't plan for that financial goal. I wish basis was there when when I was thinking about it, but that to me was a wake up call as well, right? So we see across the board how there are very specific financial objectives women have, very relatable life situations that women talk about. Off late, emergency funds, creating that has been a hot topic in our community, right? Again, we've had women share stories right from, hey, my laptop broke, thank God I had my emergency fund to get a new one, all the way to I had a health scare in my family, thank God that I had an emergency fund, so at least the financial stress part of that was taken away. And so these are kind of the ranges of conversations we've seen. And what I've loved most about the community and learning about how women view money, which does tend to differ from how men view wealth and growing their wealth, etc., is that women have more of this supporting their family sort of an approach, right? So even with a topic like health insurance, when we talk about it on basis, yes, we do urge all women to have their individual health policies, but there's always questions on how can I get my parents to have better coverage in terms of insurance, how can I get my in-laws to have it. So there is that inherent, like, how do I support my family, which is like when women are financially independent, people say everyone wins, and that is so true, and we've seen it play out on basis time and again.
True, being women in finance, who knows this better? That the family itself would sort of economically grow the moment we see more women stepping into it. And I think the
Absolutely.
planning mentality also, the whole bit of, okay, not the approach that we'll do it when we get to it. It's always being planned well in advance.
Yeah, and women do tend to have a better long-term perspective, right? Which also kind of feeds into why women make better investors, right? So it's not just like, oh, I'm in there to make a quick buck, chasing returns. Those sort of behavioral tendencies we tend to see less amongst women. So women tend to be long-term thinkers, want to know details, right? That's the other thing we've seen within our community. It's not about just blindly following the herd, right? Like, what does this mean? What does this mean for me specifically? Questions like, hey, if I invest in a mutual fund, what happens if the fund manager leaves, right? What happens to my money? And these are questions and discussions that we tend not to see in some of the other platforms and forums that exist. So it's been, yes, eye-opening to be building for women, and very, very excited for as we continue to build and scale.
But Hina, again, we discussed in this previous session also about Bharat and India having huge gaps. How would rural women react differently to financial education, especially with the language barrier? We have very little content, and even the financial documents that are in vernacular languages, and they're too complex. So, guide
Right.
us through this.
So yeah, so that's also a very interesting question, Kathy. I don't believe, or at least from what we've seen, there isn't that much of a difference. In fact, with um, suburban rural women, there may be more of a requirement for women to have an income, right? So the whole dual income in a house, the urgency of it, the importance of it is much more. And in fact, in the same article that I was referring to in front page of the ET today, was talking about how women from tier 2, tier 3 cities were coming into the investing fold as much as women in metros. So I don't actually believe language may be that much of a barrier. Platforms such as Groww, of course, are doing a phenomenal job with regional language content. Again, we're seeing a lot of that change. I do believe it's a lot of it that's tied into our social fabric. In fact, we say a lot of the urban population somehow tends to get left out, because that's the segment of the market, to what you were saying, right? Like, oh, when I when I need to do this, I'll do it, versus kind of having a continuous learning, continuously being on top of sort of money management and finances. So I don't believe that rural women, etc., are behind urban women, but scope to do a lot, across the board.
Thanks, Hina. That tells us that, we're all made with the same mitti, as they call, and we can very well grow from the home minister to the finance minister. But after these educational efforts, have you seen them take in more riskier bets? These days we're talking about money being made in penny stocks, IPOs, and crypto, of course, not to be left behind. So are they opening up to these riskier bets?
Yes, short answer is yes. Again, the stereotype amongst about women is that women are very risk averse. The truth is that women are more risk aware, right? So women tend not to, like I was saying, blindly jump into something they don't fully understand. Crypto being, a great example. We see so much interest in that asset class, but like a lot of other things, women tend to get left out of that conversation, right? So that lack of confidence tends to lead to lack of action. But once the awareness is there, the education is there, women know what they're getting into, we see appetite for risk being, quite high. So I think that's how women view different asset classes. In fact, stocks are popular. Crypto is another one. Although, yes, I believe only about 15% of crypto investors in India today are women. Again, trending in the right direction, but the education information layer needs to be there. And then we'll see kind of a huge, leap, a huge rise in those numbers as well.
Yes, thanks. Thanks, Ina. And I wanted to understand, since women are also earning less, they're earning about 19% less than men. And there is this whole phenomena of costs which are also on the heavy front. Health insurance costs would be higher. The diseases faced by women are very different. So, do you think, after gaining this confidence through the financial education movement, they are asking for the rightful amount in terms of earning?
So that 19% number, I believe that may be a global number. In India, I've heard it's as high as like 30 to 34%, right? So the gender pay gap is ridiculously wide. Absolutely. I think once that awareness is there, women are tending to ask for more, right? I think even companies are getting more conscious of some of these biases, whether it's in hiring, whether it's in appraisals and promotions, things like that. And so, like with everything, trending in the right direction, a lot of work to do, but we are looking at these gaps sort of narrowing over the next several years.
And how about the social circumstances under which they live? Financial dependency leads them to a lot of stay stifled in those abusive conditions. So are they breaking out of those clutches?
I don't have specific data around that, but just anecdotally, absolutely, right? Like we say a lot at Basis, if you don't control your money, you don't control your life. And it's really hard to be sort of truly independent if you're not financially independent, right? We're seeing a lot more women who want to even keep finances separate from their spouses, right? Women who are recently engaged, trying to understand how best it is to structure finances with a partner. And we're seeing more of that, like move towards that autonomy, independence, control, privacy, etc. Right? So I think, again, moving in that direction, lots to be done. I mean, it's still very, very early, but we expect this space to really blow up in the next 5 to 10 years. As again, women tend to stay more single or tend to want to be more independent in a partnership, in a marriage, and want to kind of have that control and autonomy over their wealth.
Pretty insightful. And at this juncture, I would also like Hina to, unfold a little bit about her own challenges in terms of managing finances.
Absolutely. So I'll be super candid here. I am Basis's customer. I think Basis started because of my own pain points and eye-opening experiences about money. So just very quickly, the story is that, like I mentioned, I was planning to do my MBA, and that whole project for me was like a multi-year project. I wanted to go to one of the world's top schools. Did everything like a very diligent person, essays and recommendation letters and GMAT and all of that, but didn't think how I was going to finance it, right? And for me, that was that eye-opening experience. This was my first large financial goal as an adult. I had a good 7-8 years of work-ex, and so income generating years where I could plan for it. And I did happen to get into, one of my dream colleges, but the money thing kind of just hit me out of nowhere, right? And so that's what sowed the seeds for Basis. I partnered with my good friend, financial expert Deepika, who's my co-founder, to really build Basis just based off of some of our own pain points. Deepika has been advising women, men, both over the course of her career as a financial advisor, planner, and has kind of seen firsthand some of the challenges women face. I'm in that bucket, and I'm improving day on day, and building Basis has been incredibly rewarding, incredibly eye-opening for me as well. And I'm glad that I did kind of discover this when I did, and it's really promising to see. In fact, the Gen Z, women who are in colleges now, who are now coming into the workforce, are already quite conscious of this, right? And so where we are sort of heavily focusing on making sure that happens. I think even in terms of asset classes that they're looking at, stocks and mutual funds are boring. Crypto is kind of the new hot thing. Obviously, crypto has its share of risk, etc. But so much of an interest starting very early, and an audience that is very different from what my experience was when I was in college or just entering the workforce.
That's amazing, Ina. It's so good to see a woman creating, a whole system, an ecosystem for them to thrive in the financial world. And of course, when we talk about equitable power in the society, financial education cannot be negated. So thanks for creating Basis and bridging that gap. It's wonderful having you for the session, and we wish you all the best for the venture.
Thank you, Kathy, and thank you to the Groww team for inviting me as well.
Thank you so much. I think it was a very, very insightful session, and especially being a woman, I think we can all relate to it. Definitely will use, the platform that you have created, and I urge all women to use it, because I think the first step is taking the first step, and I think that's what Basis is doing. And so, thank you, kudos to you, and all the best. And without further ado, let's move on to our next session. So let's talk about our last speaker. Last but not the least, we have a BTech in Mechanical Engineering from IIT Delhi, post which he did his MBA from IIM Ahmedabad. He started his career at Tata Administrative Services, and post that he held various positions for the government of Odisha and India, where he served roles such as the Director and Deputy Secretary of the Ministry of Finance, Commissioner cum Secretary of the government of Odisha, and several other roles. While working with the Ministry of Finance, he spearheaded the formation of the National Investment and Infrastructure Fund, which is the NIIF, and worked on improving the FDI policies, prepared the initial framework of digital payments, and also worked in the areas of developing urban and industrial infrastructure. He has been a member of expert communities and working groups set up by the Ministry of Finance, Niti Aayog, RBI, and SEBI. He was also an advisor for the World Bank Group. He is an IS officer of Odisha Cadre and over 30 years of experience at different levels of government. He also holds a PhD in international economics and development from the Johns Hopkins University, USA. These are some fabulous credentials. He is none other than Dr. Saurabh Garg, CEO of UIDAI. We are so happy to have you on board, sir. And
thank you. Thank you. It's a pleasure for me to be here today.
Thank you. In conversation with him, we have Grow's very own Vice President of Strategy and Ops, Mr. Varun Gupta, for this session titled Future of Aadhar and India's Stack. Over to you, Varun. Varun, you are on mute.
Oh, I'm so sorry. Am I
No.
audible now? Yeah.
Yes, you are.
Yeah. Thank you, Richa, for the warm introduction, and welcome, Dr. Garg, to Thrive. We are absolutely delighted to have you here at Grow, and I can personally say that I am very excited to have this conversation with you. When Richa started introducing you, I was not sure if the list of credentials will ever end, but it was. It's great to have you here with us, and we'll
Thank you. Thank you. It's a pleasure, and a pleasure especially to be on what has just been announced by the Prime Minister as the National Startup Day. So it's especially so much more gratifying to be present here today. Thank you.
Thank you so much. Before we begin, sir, I know we have to talk about the future of India's tech, right? But before we begin, I think let's start off from the very beginning, right? We understand, anyone who has been in the financial services sector know that the growth which the sector has seen, or the financial inclusion which India has been able to do, has been sitting on the foundation of Aadhar, right? And we all, but it will be great if you can tell us on the genesis of how Aadhar was born, what was the thought behind it, and what was the process, what was the thought process at that point in time. If you can walk down with us on that memory lane, and then I think we'll then jump to the future of India's tech.
Yeah, sure. You're absolutely right. The genesis of Aadhar was about 15 odd years back when people were looking at how to ensure that effectiveness of different programs which the government has given, what can be done. And also a realization of the fact that for a person, there was no single identity which was universally accepted across different sectors. So while you had different IDs like a driving license or a passport or a PDS ration card, number one, it was not universally available with everyone, and second, it was not nationally acceptable by everyone. So that led to the thought process of whether we can build such a kind of a national identity. And along with that was also the need to have an identity which really cannot be lost or stolen or destroyed, because people in the rural areas, if you give them a card, it may get lost or stolen, etc., and they may forget. So, keeping that in view, something which is universal, something which is portable, something which is anytime and anywhere authenticable 24 by 7, and along with that have minimalism in data collection, because that itself can become an issue. So keeping all these views in mind, the Aadhaar architecture was developed about a decade back is when it started, and within a short time it was acceptable, and now we have reached a stage where we have more than 1.3 crore, 130 crore Aadhaar that have been issued, more than 1.3 billion, and 99.8% of the adults have the Aadhaar card. So, and we have systems which are 24 by 7 available for authentication. We have both online authentication, offline authentication, which is available. And I think we've more or less achieved that initial goal of having a national ID.
Wow, that's really great. That's really humbling to know that there is a program which we have which has a reachability of 99.8%. That's great. My what I was very keen to understand, sir, when you were explaining about how you basically build up Aadhaar and made it to massive reach, was there are different kind of programs which you have created on top of it, right? There are different, like for example, biometric authentication, payments services which you have created, right? There is interoperability. This layers have helped bridge a gap, but UIDI is like an enigma, right? There is a lot of things which happen. It will be great to hear from you on what are the different levers, there are different layers which UIDI has built, and what purpose do they play for Indian masses or for different stakeholders.
Yeah, so I mean, there are different use cases which have developed, but there are some basic tenets which are across all of these. One of this is a kind of a presence-less layer, if I can put it. It's like an on-demand authentication. So only when it is required would an authentication be done. Otherwise, there is no need to authenticate unless there is a real requirement to do so. Similarly, on the paperless layer, that it's only if on-demand documentation, if it's required, then it needs to be produced, and that builds in another element into this. And then you have the digital financial transaction, which is, if I can put it, the cashless layer. So depending on when a system requires to withdraw, then you can use that layer to withdraw the cash. And most importantly, I would say, is the permission on demand, the consent layer, that everything is only done on a consent. And just to put it in more concrete terms, these abstract concepts. So you have the products like the Digi Locker, where you can have different certificates on the Digi Locker, and Aadhar is there, and you can access many of those through the Aadhar system. You have the eKYC, the Know Your Customer, where if someone wants a confirmation whether whom you say you really are, you can just show them your Aadhar card, and there's a QR card in it, and there is a QR card reader which is available. This is not the normal QR card reader. This is an Aadhar QR card reader, because our QR code is encrypted. So, but it's available on iOS and Android, anywhere it's available, and anyone can download it, or it's also a part of the mobile Aadhar. And one can read that just to confirm whether there's been some photoshopping done on the name or the photograph which is there on the card. So it's like a layer. Then you have the e-sign, where you can have digital signatures done. Of course, you have the UPI and the United Payments Interface, and the AEPS, for example, the Aadhaar-enabled payment systems, where you have across the country, people are able to utilize that by just giving their fingerprints or the iris and a biometric authentication, and you can do a host of services. So I think it's a combination of these which is available through various applications which have been developed. And I'm sure as we go ahead, we'll see many more of these being developed. But all of them have one thing in its common, that it has to have the consent of the resident. Only if they want it, can be used, not without that.
Got it. Understood. So, see, I can personally vouch, and we at Grow know that some of these features we have very broad, we have used. So, our objective is driving financial inclusion, right? And we have used some of the features which you talked about, like DigiLocker, e-sign, very UPI, very extensively to drive financial inclusion across the length and breadth of India. But is there any, when you talk about the list of features, right, is there any feature or any layer which you think which is underutilized, or there is a potential for this layer which needs to drive a certain key objective which UIDAI stands for, which is not necessarily been living up, is being used to its potential so far?
I think if you look at the kind of penetration that there has been in the banking sector, that now you have around 140 crore bank accounts, out of which 120 crore odd are Aadhaar linked. And you had the Jandhan Yojana, where nearly 40 crore bank accounts were opened, and it was done riding on the Aadhaar public infrastructure that was available. So that's one set of infrastructure that has really grown the banking accounts, banking system, which has really utilized the Aadhaar infrastructure.
Yeah.
A second area where a lot of use has been done is on the mobile penetration, that the telecom companies have been able to use the eKYC feature. And now we have reached a point where we have 118 crore mobiles in the country, and out of which 80 crore nearly are smartphones. And that's the same level of internet penetration that we have. So these are two areas where a lot of work has been done by a number of partners, and a lot of it was also due to Aadhaar. I won't say only due to Aadhaar, but the Aadhaar really facilitated a lot of this.
Right.
I think some of the other areas where we can, and I'm sure all the partners are working, even we are working with many of them, is if you look at, for example, on the investors side, investment side, where currently we have around, let's say, maybe 5 to 7 crore investors, unique investors. But whether we can use the eKYC mechanisms to increase and onboard more persons who can possibly be investors. Obviously, the universe will be much smaller. You have around 40 odd crore PAN cards that have been issued to individuals. So that gives some kind of an indication of what is the numbers possible in that, if you look at that. Similarly, on the pensions and insurance sector, perhaps we can look at where the gaps are and how the Aadhar infrastructure can be leveraged. Um, on the health side, the health ID, the health authority is using the Aadhar infrastructure to ensure that larger number of people are enrolled in the Ayushman Bharat Yojana. Similarly, we are looking at possibilities in scholarships, etc., to ensure that it can be targeted much more effectively and at the same time make it much more universal. So I'm sure there are a lot of areas, many of which are yet to be discovered. But given the public infrastructure that is available, and given the fact that Aadhaar universally reaches every resident in India, I'm sure we can find more means to what I would call to make the ease of living for people in India, how to improve the ease of living.
Got it. That's great, sir. To be honest, we believe that Aadhaar in standalone will create a separate economy, is the, foundation of create a separate economy. And we are just seeing that starting, and you touched upon that. Just doubling down on the same question with a particular sector in mind, right? So when we talk about India, we talk about two types of India. One is the urban population, the India, the real people who, the people who understand English, talk in English, metro urban population. And then there's the Bharat, right, which does not still have limited access to internet or have no access to internet. What in your point of views is can Aadhaar play a role can play a role to drive the financial inclusion, or can or how can companies like us or other companies or environment in the whole regulation in general can use Aadhaar infrastructure to drive financial inclusion to this sector?
Yeah, yeah. One thing I would just like to mention that we have this Aadhaar-enabled payment systems by which people can withdraw cash from anywhere, any one of the 6.5 lakh villages. And currently, we have about 50 lakh micro ATMs. So these micro ATMs are with the different business correspondents of the banks. It can be the local shop, local vendor, whatever. And these 50 lakh micro ATMs, which are already functioning in across India, by use of the fingerprint, they can access the bank, and without the need to go to a brick and mortar branch and withdraw cash. And in the last 2 years, we've seen crores of people doing that. The point that I'm making is that uh, uh, lack of internet access is now limited to a very, very small portion. You
Yeah.
have the Bharat Net program, which would enable optic fibers at every panchayat and further going down to every village. I already mentioned that we have nearly 81 crore internet connections and 80 crore smartphones in the country with a population of 130 crore. Obviously, there will be people having double and triple. It's not 80 crore unique smartphone and 80 crore unique, but the fact remains that the penetration is high. And apart from that, I can also mention that now we have nearly 4.5 lakh uh, citizen service centers, the CSCs, which are dotted across the country. So in the 6.5 lakh villages, we have nearly 4.5 lakh citizen service centers, which are what was earlier called internet cafes, where there will be a computer and internet capabilities. So I think availability of internet is, there would still be pockets, there will still be hilly areas, forested areas where there could be problem. But I would say perhaps, I don't have the exact figures, but my sense would be more than 90% of the country would have a stable internet connection, or they would at least be able to access it from a close by place, even if they don't have it in their own houses. So, given this kind of depth of the internet penetration, we look at the number of transactions that are being done on Aadhaar on a daily basis, and it is 6 crore transactions per day. In December, we reached the highest was 8 crores per day, and the trends are really increasing. That means that many number of people across the country on a daily basis are using Aadhaar either to withdraw cash or go to a PDS ration shop to withdraw food grains, or do a host of other activities, especially related to government transactions. And if I can just add to this, is you have the Manrega scheme, which is the rural employment scheme, where a large proportion of them are Aadhaar linked. And sorry, I just recovered from COVID yesterday, so I'm slightly. I was at the Manrega, where the money goes into their bank accounts and they can withdraw it in their village through AEPS. You have the PDS ration shops, where any family member can show their finger imprint and withdraw the ration. So, and these are all we are talking of in rural areas. You have PM Kisan, where people, the funds go directly from the government to their bank accounts and they can withdraw it anywhere. So I think we've reached, I won't say a saturation point, but we are really nearly there, and I'm sure given BharatNet's growth, we'll soon reach there.
Got it. That's great. So, sir, I think personally, I think, see, we from a private company and people who are largely operating in the urban sector, we are yet to learn a lot about the applications of UIDI and how we can basically leverage and drive financial inclusion. And this session is very helpful, especially very again thanks to you that while you have been here with us in spite suffering from COVID till yesterday, and thank you so much once again for that. I'll continue with my questioning on this. So this was great, and I would, basically go back, do my own research, and we will possibly connect to understand what more things can be done from the rural side. Coming back to our urban side, right? We understand our sector, like where Groww operate, and we have seen in the last couple of years. I'm sure you would know, but like the industry was largely offline, right? Account opening was largely offline, and this was creating a lot of hurdles and growth of the industry. But in both mutual funds and stock, thanks to UIDI, thanks to Aadhaar authentication, eKYC, DigiLocker services, we have been able to move via customer consent all of this transactions online, which has led to a huge growth in this industry, right? And which is driving financial inclusion. Still, though, we have grown only from 3% to 4% people in India investing in markets, but I'm sure it's on the path to basically grow. Do you have you seen any examples in any other industry where Aadhaar has basically or the jam the stack which we talk about, India stack, has basically led this kind of growth and is basically creating a whole new employment, new economy altogether?
Yeah. So this Jandhan Aadhaar mobile is something which the government has really been utilizing and leveraging extensively, whether it's in terms of the DBT transfers that are taking place, where more than around another DBT program, 20 lakh crores of rupees have been transferred to residents across different schemes and programs, etc. Whether it's MG Narega, where to transfer funds and to onboard laborers and employment that is being used. Currently, the Ministry of Labor is preparing its labor database, and they are using Aadhaar to onboard the laborers onto the labor database so that different programs and benefits can be given. So I mean, on the government side, there are hosts, but I hear you that you are asking on the private sector side, and obviously the banking is one example where I gave, where you have now 140 crore bank accounts that have been opened both by public sector and private sector banks. Uh, in the investors field, the Securities Exchange Board of India has facilitated the use of eKYC to onboard investors. And we would be very happy to work with the industry on to see what are the wrinkles, if there are any, which are causing the ability for the private sector to leverage Aadhaar to a much greater extent than they have been, and to work out mechanisms to do that. Obviously, we have to work within the privacy framework, within the consent framework. So, with the consent of the resident, it should be possible to be able to ensure that if the private sector wants to onboard certain categories of people and provide certain services to them, that they can utilize it. We'll be very, very happy to work with the industry on this.
Wow, that's great. That's a great moral booster. I think not just for us but for the entire industry. Just continuing my line of understanding on what you were talking about. So in your recent interviews, you have talked about usage of blockchain and quantum computing in Aadhaar. We here have been wondering, as we said, that how is that to related? How can so blockchain, as you understand, is a new and a great, a very massive technology, right? Same like, and Aadhaar is a very big network, very big framework which has been created. How are both of those two coming together? How do you visualize creating a winning solution, including both?
Yeah, yeah. So but these are both two technologies on the horizon, and given the fact that Aadhaar always is scanning technologies, we would like to be abreast of what's happening. Like, for example, I can just give you some examples. Like for us, cybersecurity is of prime importance because we keep updating our systems. We have number of firewalls, etc. And to the extent that quantum computing may affect cryptography, quantum computing may affect security systems, we need to be cognizant of what kind of quantum computing resilient security systems can be developed. But obviously, these are on the horizon, and we remain in touch with academic institutions and other technology experts to see what is it that we can make use of. The second is in terms of, for example, the blockchain that you mentioned. Obviously, whether a distributed public ledger would help us to, in any way, utilize the decentralization that is possible, to look at what kind of consent architecture might be possible using blockchains. So these are things which are still on the horizon. We have different internal groups, and we have groups working with different academic institutions. And obviously, once things come to a stage, then we can think of utilizing these technologies. But in Aadhaar, in UIDAI, we feel we need to be abreast of every technology so that the kind of faith and the credibility of the system, of what the kind of information that UIDAI has, that credibility is and the faith of the people is uppermost in our mind. And keeping that in view is what we do a scan of technology on a regular basis.
Got it. Very clear, sir. I will now jump, while I have already jumped, but I will now go further into what the future holds for us from Aadhaar perspective. Are you planning to do any, what are the customer facing innovations which Aadhaar is planning to do? Any crazy ideas like biometric on ATM? What can we expect from UIDI in future?
Yeah, yeah. A biometric on ATM, if I can say, in a way, it's already there.
Wow.
I mentioned these micro ATMs, which are essentially these small, the kind of card readers that you have in shops, which are 50 lakh of them. They are with banking correspondents all across the country, and they have a fingerprint reader attached to it. As of now, we don't have an iris scanner attached to them, but it's a simple addition that can be done, and you can attach to these micro ATMs. It may not be at the fixed ATMs, but at the micro ATMs, you already have. It's in an assisted mode. What you are saying is whether we can do it in an unassisted mode is something we will have to think about, and what are the implications of that. But biometric readers in an assisted mode are already there. Apart from that, we have this mobile Aadhar app, which I would strongly urge. It's there on the Android and iOS Play stores, and which provides a host of services. You can download your Aadhar, you can download an XML file and send it to someone if they want it. It has a stamp on it. If you want to verify some Aadhar that has been shown to you, whether it's Photoshop, you can use the QR code reader that I mentioned, which can be used. We have these facilities like lock and unlock your Aadhar. If you want to lock it at any time, you can lock it or unlock it at any time. And apart from that, we've also started face authentication. So in case on a touchless mode, because fingerprint biometrics means it is a touch mode, and during COVID, that was an issue. So whether we can have this touchless mode through the face authentication, we hope to. We've already introduced it in some applications, and we hope we will expand it going forward. So there are a host of things that we are in, and our focus is resident centric. Whatever we can do to improve resident convenience, whether it's in terms of enrollment into Aadhar, whether it's in terms of updation of the information address or mobile phones which require to be updated, which can be done on the portal, or in terms of authentication and using different modes of authentication and by different sectors. We are already working on that, and we'll be happy to get ideas. And if there's anything, any other out of the box idea, we will be very happy to look at it.
Great. Thank you so much, sir. This point of yours always has strengthened my belief that we have just scratched the surface of what Aadhaar can actually offer, right? We are at 10% and we are seeing tremendous growth. And I'm sure once we go deeper and once more use cases are implemented, more and more, growth or financial inclusion is to be seen. Right. So I think we are quite clear on how Aadhaar, what is the vision, and what the future holds for us. I think on a last question, I think I would like to pose, and this has been a popular question, and I've not just from people here at Groww, but many people have been asking us that Aadhaar is one of the best success stories in the world, right? It is one of the biggest framework, one of the biggest technology which has gone global, which has been implemented at such a massive space, and other countries have taken notice, right? It has gone global, and I'm sure other countries in one way or the other would have approached you or would have liked to implement similar programs or programs in cohort. Is there any plans for Aadhaar to basically take this model out of India or the technology infrastructure out of India, the framework out of India, implement the best practices, and not just contribute to the growth of India, but to to the global growth in general?
Yes, in fact, there are some countries which have already adopted the Aadhaar architecture in developing their national ID programs. I think two countries come to my mind is Philippines and Morocco. They have already adapted, modified, and built their own systems accordingly. At the same time, there has been interest from a number of other countries who have shown interest, and we have discussed with them. And we are working, and we hope to continue to work with them in the near future. And there's another area where we would like to collaborate with international organizations also. on to building digital identity standards. Because Aadhar is the largest digital identity across all nations. We've built a number of mechanisms, and we would be happy to standardize them so that it can be useful for countries in other parts of the world. I don't know whether you're aware, but having a digital identity is now part of the Sustainable Development Goals of the United Nations, which brought these out. And it says by 2030, building national digital identities is something every country must do in order to empower and in order to equip their own citizens and residents. So this is something very much on the agenda for all nations across the world. It's part of the UN SDGs to achieve by 2030. And we are already working with some of our partners who have worked with Aadhaar in the past over the decade or so. Some of them are independently working, some along with us on with other countries, so that their digital identities can make use of the architecture. So this is very much on the horizon, on the annual, and in fact, if I can say, partly in operation also.
Wow. Thank you, sir. So it's thank you for telling us about that. We, of course, I didn't know personally. I'm sure some of the audience would know that this program has grown global. I've always assumed that it should, and it's great to know that it has now. I think that concludes our session, and I once again thank you so much for educating us about the vision, future of UIDI, and we are very excited, not just as Groww, but personally on how best this technology or this framework will basically help in making India digital first. Thank you so
Thank you,
much.
thank you, thank you. It's been a pleasure, and look forward to having more deeper conversations with the industry, with Groww, and with others in the industry.
Look forward to do the same, sir. Thank you so much.
Thank you. Thank you.
Thank you so much, sir. Thank you so much, Varun. It was wonderful having you here, and we gained so much insights from you. And especially being a youngster, we see a future in Aadhaar, and definitely the possibilities are endless. So thank you for shedding light on that. And
Thank
on
you.
that note, yes, thank you so much. And on that note, we would like to close today's session. We have a quiz for you, so definitely stay back. But before that, thank you. Let me just wrap up the sessions. Thank you. Please clap for yourself for taking this step towards financial literacy. I hope all of you could learn a thing or two from the sessions we had today. Please mention in the comment section what was your favorite session and what you could learn from it. Thank you to all the speakers for being so candid and driving these sessions with so much vigor. Honestly, I cannot stress on this enough, but we all definitely learned so much today, especially coming from people who are driving the markets that we do invest in, coming BSCC, NSC, CDSL. We have learned so much from each of these folks. So a huge thank you. um, you know, I will do my usual thanking that I do after every Thrive. So for each speaker. So thank you, Lalit, for setting the tone right for this event with your 5 tips. Thank you, Ashish, sir, for shedding light on the fabulous work being done at BSC and how it is setting benchmarks when it comes to exchanges globally. Thank you, Prashant, sir, for shedding light on the need for IPO DRHPs and the importance of cautious optimism. Thank you, Radhika, ma'am, for shedding light on how important it is for new age investors to stay responsible and remember that they are the children of the bull market and they have to be cautious. And thank you, Bala sir, for throwing some light on how investors should get educated and aware about bonds. Thank you, Nehal sir, for talking about how technology is leveraged in many objective ways to create a very level playing field. And thank you, Hari sir, for talking about the importance of educating people about the routes that exist and reinforcing how technology is an enabler when it comes to connecting the exchange. And thank you, Nilesh sir, for mentioning Birbal ki Khichdi. I think it got very, very famous when it comes to gaining trust and confidence and moving away from the riti rivas that exist. And thank you, Rajesh sir, for talking about the importance of frictionless onboarding by easing the process of KYC, which is what RBIH is working on. Thank you, Shankar sir, for being so candid as usual and talking about the river of liquidity. Thank you, Hannah, for re-establishing how important it is for women to take the first step towards investing and taking charge of their wealth. And last but not the least, thank you, Saurabh sir, for talking about how Aadhar has played such a fundamental role in the recent times, and it will continue to play the same role and even better in the future. And lastly, a very, very big thank you to all our moderators. Honestly, this session would have just been a bunch of ideas without you. And thank you for driving it so well. And I think the way you drove all the sessions was the reason why we have what we have today. So thank you. Now, coming back to our final segment, we have a quiz for you, basis all of the domains that our speakers work in, and also based on what the speakers do. So, we will be sharing a type form link in the comment section. So, just watch out for that. Go ahead, answer the questions, and our top 10 lucky winners will win goodies from Groww. So go ahead, fill in. The Typeform link is already available. I can see it. I will quickly also flash it on the screen for people to see. This is the link to the quiz. Go ahead, fill it. I'm telling you, 10 lucky winners to get goodies from Groww. Also, don't forget to tag hashtag Let's Thrive on Twitter, Instagram, LinkedIn. Tag the speakers, tag Groww, tag me, tag everybody you can think of. Definitely get the event trending post event also, because we want to create the buzz about financial literacy, financial inclusion, and financial education. So, guys, thank you so much again for attending the session today. You guys have been a wonderful audience. Thank you for keeping up the energy in the comment section. That is the max we can substitute and applause with during these sessions. So, thank you. And we will be back soon with another edition of Thrive. Let us know in the comments what is something that you would like to see in the next edition of Thrive. I am sure a lot of you would have attended this for the first time. What is something you would want us to do differently in the next Thrive? We are open to what the Janta says. So definitely let us know in the comment section. You have been wonderful. I cannot stress on that enough. And I will see you again in next Thrive. Till then, keep smiling, keep investing, subscribe to Groww, like this video, hashtag Let's Thrive, go answer the quiz, and I think I've summed it all up. So bye bye, guys. Okay, don't guess. Quiz, link to quizzes over there. Okay, I'm Richa. I will see you again soon. Bye bye.